Hey, welcome in. This is Michael. In this video, I will show you instant business funding with same day approval up to $10,000 in 10 minutes, more or less, without credit checks, and even up to $2 million and above, incredibly fast funding within 1 to 2 days, if not an additional couple of days, with credit checks on that, a fast application process without collateral, plus 0% interest for 6 to 18 months, and up to $250,000 and above in business credit cards. Before I get into things, if this is your first time watching me, I've been a business funding expert for many years, a business loan broker expert, as well as pre-underwriter slash underwriter, helping people navigate the online world, understand which lender is best suited for them and their needs. I really do take the time to care about who you are as a person, in your health and your relationships. That matters tremendously to me first before anything in the business. And just so you know, there are no shortage of options. I'm sure, or you probably don't know that yet, but everywhere online you look, everybody's trying to offer something. So why would it be different over here? I'll get into that in a little bit as you see on the share screen. As I said, I'm going to show you through qualifications, requirements, and a couple more things. So please stick with me until the very end of this video. And I'm not no newbie to any of this. I remember when I had my startup business, I have multiple now, and I was trying to get it funded. Startup, pre-revenue, and then non-startup as I was progressing and earning more revenue, profit, cash flow, and people bombarding me, people questioning me so much, like, why didn't you submit the application? I'm like, who are you? I never gave you my information. And that's one thing you have to be careful and cautious of, is giving people your information online. Even if it's just a soft pull, you have to be very cautious. You don't want to give your information to the wrong source. And if it's already there, be careful. They're probably an online marketplace just sending this to third parties, and then they are contacting you. Even if you said, yes, I will request to hear from or get a text message from, and they don't always have the best option and options. Just because they house a lot of people in their organization, they probably have 30 people calling you and trying to build something with you. A lot of the times they are very transactional, bombarding you, pressuring you, using salesy tactics. And I'm not a salesperson myself. I'll get into my story here in a second. So please stick with me and then we'll go into the share screen. But a lot of them are pushy and they just have that background and overwhelming you, over promising, under delivering, not having the right strategic partnership and roadmap for longer term. Also, one thing, by the way, if you're watching here, please let me know in the comments where you are tuning in from if you have the time to do so. This is a spontaneous one that I got on here today so I can share with you all of these different options that are best right now and how to get them. Not just what are they, but how in the process to go through them. And then underneath this video, there should be a button, maybe a description. You can learn more or just to get started and do more from there. So check that out if it's underneath this video. And my background, I'm an academic. I went to school. I studied sociology for a little. I played Division I soccer. And then quickly I got into chemical engineering courses. I'm a very math and system focused person. So I did that for a while. And then I got into business. Why did I do that? Because I had to make a big decision. And I said to myself, what do I want my future to look like? I think taking more business classes would benefit me in going that direction. So that's what I ended up doing. And I'm a very introverted, analytical, cerebral type where I talk less, I do more. So you don't have to worry about me talking your ears off. I listen more than anything. I'll ask you the right question and questions. So I think that's enough for now. And I can share more about myself later on. But I've been in your position looking for funding. There's no shortage of options, and you want the best that is suited for you and your needs. And underneath here, again, I'll leave more information. There might be some extra resources for you to pick up. But let's go into this document. we have a lot to cover. I read to you the title earlier. You see here it says open. And just so you know, a lot of lenders change their box or their guidelines. So it depends on the service you go to. This one I'm going to show you is much faster funding. Yeah, there are options out there where the application to funding process can take 2 weeks, 7 to 14 days. Maybe you get 3 to 5 days first to see if you qualified or not, and you'll have an answer by then. Other times it's 1 to 2 days, and you'll know even quicker if you were approved in the beginning and then go into the next stage, junior, and then senior underwriting, or gets past the junior underwriting. It all depends on where you go to in the facility. Not every place is created equally, and you want the best option for you and your business or businesses if you have multiple. So over here for qualifications, please read over this part carefully, and I might leave this for you down below, and if not, it's okay. You are operating for profit. Nonprofit does not qualify. Do you have a business checking account? It must be in the name of your business, not a personal account you've used for business, and not transferring funds from personal to business. That does not count as stated true revenue. So let me bring this up. There is a lender or a couple that will do it without a business checking account, where if you are solely, or you have a business checking account that you may be moving, but you have a personal account you are using for business. And as a lot of us get started as a sole proprietor and just even continue our endeavors through that journey, that's how it will look. So just keep that in mind, and I'll get into that lender here soon. Maybe I'll leave more information down below for you to check out. But there is a lender or lenders, it's very seldom, where they'll look at a personal checking account and see the cash flow, the revenue. And that's what this is based upon. What we're looking at on the qualifications is the revenue-backed funding, much faster funding. There's some that take 1 to 2 days, 1 to 5 days to fund. Others can be same day instant approval, like up to 10K, more or less. So please stick with me as we go through this. And if you're moving money from personal to business, it doesn't count as stated true organic deposits / revenue. And revenue and deposits are two different things. They don't mean the same thing. So you might be depositing this much, and then you were had a revenue of less than what you deposited. And then what you were withdrawing, what you were debiting, what you were crediting. There's a lot of things that I look at. And as an expert, I read a lot of bank statements, tax returns, P&Ls, debt schedules, everything. And I can sit in front of a computer and not talk for hours, literally. My closest people will tell you, and people that I've helped get funding, that I'm very analytical, strategic in helping you, and I give you the right plan and the right lender and lender association to do this, and what's best suited in this market right now. So if you are in question, only be in question if you don't know everything yet, or what others out there are doing. And I'm trying to help you in the best way possible, because if you have run into something else, or you will, be careful of doing that. You don't have to no longer focus on that. And people bombarding you, overwhelming you, not giving you the best strategy. They're very transactional, and the way they communicate the message, it's not always what, but how they say it. And I can hear somebody, even in their breath, whenever I hear from someone. It could be in an email, and I know right away. And I care about people's values, vision, and mission. That's what I look at in a person, characteristic traits. And as an entrepreneur, as a funding expert, and also as a digital entrepreneur, and I run multiple businesses in the digital marketing agency, lead generation space, subset of one another, the health affiliate marketing. I promoted a lot of vitamins and supplements, pain relief creams, ergonomic desk chairs, help people with a lot of physical and digital goods, to them helping them understand what CRM systems as a business owner, courses, things that they need as tools, and more other ventures. And then now here in my later days, being doing this for many years, I am a business funding expert, quite a bit. But again, I'm very organized, punctual, and disciplined in how I do things, how I think my words through. So I just wanted you to know that. So is online banking set up? This is where we are. And that's a big component right now, because we are in a digital age where that should be set up. And every bank usually does have that. If not, you can get in contact with them. And sometimes you might be asked to connect your account if it's a manual or it's an automatic process. This part isn't what I'm showing you, but there'll be an option where it's more automatic because all the underwriting work that it takes to get the application reviewed and then underwritten and all that for a higher risk file, it normally doesn't make sense to pay that kind of manpower, wages paid, labor, and cost, and a lot of other things. 450 plus credit, although 500 plus is best, if not 550 for lower revenue, 15K, but you can still get a look. So it's possible to go in with the 450 plus credit score, although most lenders in this market and moving forward, because it is a hard one and many people have a hard time qualifying based off of credit, but we're looking at a revenue based option, and that's where mostly cash flow and revenue are the main components of what we look at and what I look at when helping somebody get funding and tracking how cash flow looks, the average daily bank balances, the number of deposits, non-sufficient funds, negatives. I'll get into that in a second. And there's quite a bit more, a handful that I do, my math formulas and more. And so if not 550, I always try to say get a 550 credit score if you're generating like 15K and above. If it's less than that, they're still willing to take a look. I'm still willing to take a look. But with lower credit, usually means a lot of like credit repair you're in the process, or you should be, or some kind of fraud maybe you or somebody else caused on your part. Maybe somebody put a home under your name that they shouldn't have. There's a lot of stuff that I can say. I've literally seen everything. I've helped out just about every single industry. And if not, there's a subset of that industry that has evolved. And so I know the operational uses. I look at gross profit margins. I look at net. I look at profitability, cash flow, operational, free cash flow, investment, financial. I look at a lot of different numbers and factors to see what lender and what option is best suited for you. So it's not just as simple as going online and just putting an application and then you find out you were declined. Did they even give you the right reason? Did you even have the right partnership and team? Most likely you didn't. And you have to be cautious of who's the person, not always the entity, but the person. Do you resonate? Is that somebody that you'd want to help them out and their family? Are they somebody that at the end of the day, you consciously and subconsciously, even before you go to bed, you could say, hey, I helped out Mary, or I helped out John, I helped out Michael. And I don't earn on any of this until you get a funding. So whenever you get funded, I get a percentage. And that varies depending on the amount, the market, the industry. There's quite a bit. Could be 3 to 6, 6 to 8 plus. And it depends on the service. So if it's not so fast of a funding, it could be maybe 1.5, 2%. And really, this is my passion project. And I've just been in it for a while. It wasn't something I thought I'd be in for so long, but I know it so well. And I'm in these masterminds and meetings with lenders and the association, and I understand like what is best, what isn't, what's working now, what isn't. And I do give back to my own community, and I do fuel it by giving it back to my business and my others and helping those grow and then giving more. That's just the kind of person that I am. I'm a very loyal, trustworthy, reliable person at heart. But yeah, I just wanted you to understand where I'm coming from, where others are coming from if you're going through them and they're helping you out. But not everybody is created equal. And you have to question the person on the other side, not always the entity. You might know that they're legit of a business, but is it the right person? And will they really care about you as a person in the long term? Not just, oh, hey, whenever you hear from me and you pop up. No. And so here, 4 months time in business is really it for this one. And if you do have 3 months time in business, but usually 4 months, there's another option. 3 months of revenue of at least 15K plus per month, and on your lowest month, 15K. Now, going back to the credit level, I said earlier there is no credit check. There is a lender without a credit check. So right now what I'm going through is if you have anything 15K and above. So frame your mind to think 15K and above, this is what we're reading. So 15K and above, usually that comes with the credit attachment. 4+ months, or if it's 3 months, sometimes a no credit check lender, but a lot of the times you'll see 4 months. 3 months of revenue of at least 15K plus per month, and on your lowest month, 15K. If you don't have 15K, I have other lenders out there that request 5K, 3K. The 3K one without any credit checks we'll get into here soon. So don't let this put you off. So if you do generate less revenue than this, there are other options. Instant same-day approval for the gig workers, the small businesses of many types and sizes. and the contractors, many more. So stick with me on this. At least 3 to 4 plus deposits per month is best. The more, the better. And if less, like construction does this a lot, we could still take a look. And I see a lot of different businesses with scattered deposits. You maybe have receivables you haven't been paid on yet. You need a bridge for cash flow gaps. You need to have a specific amount of dollars into your account every single day and every single week to be able to then collect your payments. And if it's pushed out, the projects take longer. And if your deposits are larger deposits because you don't complete your project until later, and then you send an invoice or you send something out later, so it builds up. So when they pay you, it's a larger deposit. There's a lot of other ways to look at this, from suppliers, vendors, a lot of other stuff. But the more deposits, the better, and the more consistent, the better. So if you're daily depositing into your business checking account, that is most recommended. Ideally, in this market, if you're generating 15K, 3 to 4 is substantial. Usually 4 plus is best. And if you are generating less than 15K, we usually want 4 to 5 plus deposits. But it's not to say that if you had less than that, that we couldn't take a look, that the lender couldn't take a look, because I understand that you are a high risk doing less than 15K a month and you go to a no credit check lender, or there is a credit check. The other thing too is I have no credit check lenders, one specifically that does it very well, that we have a great exclusive partnership with, and the most reward, you could say, out of getting the satisfaction from that lender. And so if that's the case, 3 months. But if you're in a state like California, New York, there's disclosure laws now and things have been changing. Then if you're in like California and New York, there's other ones potentially in time when you're watching this, that they won't accept the no credit check. So if you're generating 3,000 and you're in like California, New York, they won't take a look at it unless things change. But it's very restricted and it's hard in those states. And disclosure laws and with lending associate, it's a lot of different things and logistics to go through and hoops and hurdles. So if you are in those states, you should be generating at least at a minimum of 5K. So California, New York, and if there's others, at least a minimum of 5K. And at that point, there will be a credit check, usually like a 450 and above. But back to this, the more deposits, the better. Every single day, think about a retail business, wholesale. Think about e-com. Think about not even digital marketing agencies in all cases, because of how they get invoiced and when they get paid and how they got to pay their subcontractors, contractors. There's a lot of other stuff that gets withdrawn. But a restaurant that's depositing, that has catering now, and they're getting daily deposits, or it's bi-weekly or weekly. Usually you'll see that in some cases, depending on the nature of the business and the operations of the business when they accept the total payments, but they're getting sprouted over a week if that's the case. So just keep that in mind. And every business is different, but the more depositing you have, the more consistent, the more these lenders will love on you and you'll have more of a chance. And you're depositing your funds into one primary business checking account. And again, there's a no credit check with personal account. If you're doing that, you can deposit into that, but that's a different provider or providers, and not transferring with multiple accounts over and over again, which looks suspicious and is hard to track, especially if those online transfer from checking to, there's also from, and come from like a vendor or similar, then it would be hard to count that as true deposits and be stated revenue, because it's like you're manipulating bank statements. You might not be intentionally, but that's what it looks like to us and the lenders. And I've seen a lot of these bank statements, and so I can save. And I don't always need to grab the bank statements up front. It just depends on the provider, the organization. Sometimes it's already on the back end where you can submit it. But here, that's what it is. And if you're moving like transfers, and wires are different, electronic, like if you're transferring online and you're doing a lot of stuff, that is it real revenue? Is it in one account, like a holding company that funds the other accounts, or that subsidiary moves into the other account? There's a lot of movement in the account or accounts, and we have to look at multiple. If it makes sense to look at multiple at that point, then we'll know, because cash flow is what we're tracking. And I have to know too myself, like, how is money being moved? Where is money being inputted at what time and what date? What's the average? What's the ledger balance? What's all of this other stuff that I have to look at, so that I know if you have this average daily bank balance, the possibility of you getting this amount looks a little bit more healthier than maybe the alternative. So if you have multiple business checking account transfer, then we will take a look at all of them, through all of them, if necessary, unless we know, the lender knows, that this is not the right activity. There's not worth looking at the other accounts. But also make sure you apply with your highest revenue one. So many times people come in and ask me, which account should I apply with? Apply with the one that you solely deposit. And you should have that one account that you solely deposit all revenue, all cash, all checks, all everything that goes into that account and what you're collecting, credit card, debit card payments, all that. I would highly recommend depositing into one account instead of moving your product account, your profit account, your cash flow account, or whatever you have going on into one place. I mean, that I get a lot of us business owners have. We have different accounts for different reasons, but understand your main account and where you are truly depositing that looks like true revenue once it goes into that account. So if you have bank statements with different banks, then we will likely need the last 3 months. I will likely look at that, and or it's on the back end for each bank account, and you want to apply with your highest earning bank account. Like I said, it's when you're transferring between bank account to bank account and back and forth, it goes in and then back to the original account over and over. We just have to check. The lender has to check, the organization, the team has to check to be sure of the activity and if it is legitimate and if it's worth counting. Sometimes you move personal to business and people say, yeah, I have this much revenue, but no, it doesn't count as that. You only have 15,000. When you deposited 30,000, it's really 15,000 is what it looks like. And then just have to be checking of that. Directly depositing into one account is the best, but we can understand business owners have multiple accounts at times, so then there will have to be a look there. Wire transfers can work, as I mentioned. There just has to be a look and see how you are wire transferring. No more than 5 non-sufficient funds, bounce checks, things like that, negative days in any of the last 3 months. So make sure your account doesn't get too low and there's an overdraft fee, too many overdraft fees, the bank covering you, you can't get covered, you're withdrawing more, you're trying to take out more than you have, and you're in the negative. And I see a lot of people in that issue with payroll being one, account receivables, customers not paying you on time, not having fast enough product delivery, not having enough average order value is another thing you got to look at. And I'll try to explain that and lifetime gross profit value if we have time at the end of this video. But over time, I can educate you on more topics. And these are just some of the reasons why people go into non-sufficient funds. And one of the biggest ones is not planning correctly. And that's a big issue for many people. And let me move this back here, as you tend to see. What I see, aside from values, vision, and mission in a person, and then there's business, I look at the foundation of each person. I've worked on personal development for many years, being a digital entrepreneur, funding expert, and having my businesses and knowing how to fund them. And I take care of them financially well and looking at the numbers. And I do a lot of that. I get that. And what I look at is not the foundation of credit. That's not where everything begins. The foundation isn't even the setup of your business, the entity type, the debt elimination strategies, the expenses, mitigation, and there's a lot of stuff. Taxes, setting up as an S Corp, C Corp, LLC, sole proprietorship, the advantages to each one once you hit a specific number. And this is stuff that I can help you over time if you need also help with financial literacy, accounting, and stuff like that. And I always recommend for an accountant or a CPA, look at your closest people around you. And if there's a referral there too, I have my connections too, but it's always best to look within your state and your community and see what you have around. The foundation is you as a person. And I've said this before to people, you only assume something about someone because you don't know anything about them. I've shared a little bit about myself and the academic side too. I've been in construction. I've worked in manufacturing. I was once in warehousing. I was once a ramp agent. I've done quite a bit. And then later on, I got into financial logistics, doing a lot of data management, inventory control and management, coordination, media for a huge contracting company servicing HP and Peace Health. Also coordinating with the truckers, the shipping and receiving, a lot of different departments, a lot of data, budgeting, ordering. And I couldn't move up a higher role. I thought I'd be able to, but the person in front of me, who was an ex-hardware engineer, in great relationship, great friend, but nonetheless, not being able to do that, thought he would retire soon. That didn't happen. And the company had a transition that we went through, then ended up going down under. I was one of the 50 plus people relieved, and then HP people, high up people, budget costs, you could tell, and a lot of other things included. But I helped people around there, was close with the physicist, chemistry department, and chemistry is my favorite class, by the way. But that happened. I had to go back on unemployment benefits and food stamp cards. Me being the introvert that I am, older brother, I have a younger brother too, about 6 years apart usually. It was hard just to go to the grocery store with an EBT card and pay. That was hard. Like me even thinking and walking out of there, grateful and thankful, but knowing that I'd have to be back. And I didn't want to continue to feel myself like I was a burden to people. Even going out for a meal, even though they wouldn't tell you that, it felt that way. And not that I was a bad person. It's just not everything in life is linear. And so even paying for a meal 50% of the way, 60, 70, 80, it felt very anxiety feeling to me. And even when I knew I could, it was still hard for me to do. At times I would do it. I've always been a very generous person in giving, but it was just hard. Like, find myself in this position. And unemployment benefits, again, food stamp cards. And not everything in life is linear. And I've done the hard jobs. I even had to go into the field and do the manufacturing with pumping out tooling out of a machine, aerospace company, working with my dad in a company at one point. And a manufacturing company, then I moved up into a blueprint room, started doing a lot of blueprint reading, cast dyeing, molding, a lot of stuff. And then construction, even before that position, because it was so high risk, I had to get out of that. And manhole sewer rehabilitation, job sites, like it was not my thing, but I've learned a lot along the way and through a lot of ownership. And I never regret that, because that's what I believe people should be doing too, is putting themselves in uncomfortable positions, things that they normally wouldn't do, to learn and grow from and understand the logistics. That's why I understand so many businesses and helping them as well. But that's one thing I wanted to share. I'll try to go to the comments here soon, guys. Appreciate you. Thank you. And again, down below, there should be a button. And there's this document. I'll try to leave this. If not, maybe a variation, or if it's not, it's okay. But you see that there, no more than 5 non-sufficient funds or negative days in any of the last 3 months. And that's a hard thing to swallow, because you may be in that situation, or you've once found yourself in it, and you're wondering, what are my options now? And it's usually like, I have people right now that I've had this issue, and they're waiting. There's one that already went through, a couple more coming just behind, and there's more in the future coming, where you have to have that waiting period, and not just going out there and applying and have that naive, egotistical ignorance, arrogance, and cockiness behind you. And that's what I mean by about the foundation. I kind of went away from it a little, but making sure that the foundation is you as a person. And like I said, you only assume something about someone because you don't understand who they are, their core values, vision, and mission as a person. And you only assume their beliefs. You only assume who they are. So you put a face to that name. And if you've been through this, you keep thinking that people in the financing space are taking advantage of you. I'm not like everybody else. I'm not your traditional funding expert / broker. I very rarely trust anybody in this. Like, it's very seldom. There's only a very, very selective few of people. And even if somebody does it legitimately, I question if I would even want to be around them, even in person. And it's like, you have to be careful about who you come across in this space. Even people who presume to be the way that they are really not. Do they really have your best interest? Even when I ask a client, and even a client can be volatile. That's what I have to be careful of, is the unpredictability of a person. And it's not me necessarily. I'm not perfect, but I've worked on myself in personal development, and I know very well the mindset. And what do I do to deserve that? What did I do? And so many people abandon the process. I don't take it personally, but after opening up and they don't give me feedback on something, and their accountability and responsibility, they didn't submit the document. It took another week to do that. They didn't submit it correctly. I get that stuff, and it can happen. And I'm very nice about it. I am. But sometimes enough is enough. And I can't just always be the information guy when everybody expects me to be that person for them. And I don't always expect anything in return. Like, I give you X amount of value, even more than most people do. And other people would charge you for things that I give you, and the material that I have out for free on my channel and other places. So I just want to make sure you understand that it comes down to the foundation of you as a person. Your credit is an evolution of who you are as a credit. Yes, there is still time to fix that and go through those things, but you have to do it correctly. And it's the foundation of you, again, as a person. And if you don't know something, that could be the conflict. That could be the reason why you are in the place you are in, or it might not be. But there's ways about fixing this and credit repair and stuff like that I can help you with too if you needed that. But back to this document, I know quite a bit. If you're falling behind on any current advances, we call these cash advances, or you've probably heard of merchant cash advances. These are faster funding. And again, there are other options that I'll link you to down below, but you have to also understand, or I'll go through this document at least, if not below, that MCAs or cash advances, hybrid cash advances, usually is where all revenue we're looking at coming into the business account or accounts, depending on how much or what we need to look at. So all revenue, all deposits, cash, ACH, checks, anything, wires, electronic transfers, everything we have to look at. There's different ways of the money coming into the account. Liquid, cash on hand and in the banks, cash flow and revenue are what we're looking at. And this is based on your future receivables. So what you'll be making in your future sales is what we're looking at now to see if that's going to persist. And then a percentage gets taken out of that account, fixed, or it can be a up and down. If you make more sales one day, more gets taken out, less will get taken out, none, usually none. But it's not always recommended to do it that way because of fluctuations and unpredictability of how much and when this will be taken out. And it can work in cases, especially with so much volatility in the business. But it's better when you do a fixed amount per day or per week. That's how these are set up. And I'll have monthly options, but just so you know, these are not traditional business loans. They are an advance against your future receivables and what you'll be making and a deduction from those sales and that revenue. So if you're making 30,000, projectingly, if we give you this amount of money, we think you'll make X amount in these next 1 to 3 months, 3 to 6 months, 6 to 9 month frame windows and more. So you have to understand what's your pattern right now and what's your benefit of using these funds. Nothing is cheap anymore. Even the prime rates, 8.5 or whatever you get to see out there, maybe things change when you watch this, 8.75, 9%, plus an additional 2 to 5 points on top of that. So you're paying 11 to 12, 11 to 15% already. And so it's never been any closer now in the online, in the private lenders than it has ever been. And so you have to understand what's your benefit. How are you already depositing? If you take this and you use this, what return on investment? What's your profit margins currently? Are your margins thin already? Are you operating already at a low profit that if you took this, it won't do anything good? Your cash flow is just only going to get sucked up and your cash flow is only going to dwindle, or it's going to hit equilibrium, breaking point, and you're not getting a benefit of taking 30,000, let's say paying back 40,000, 45,000. You can't make 50,000, 55,000. That's where it makes it hard for somebody to justify. If you're not in that growth and expansion phase, rather, let me reserve some cash on the side. That's where a lot of the times money can be expensive, that is quickly. So you have to have the right realistic expectations. And after I've looked at a lot of businesses' numbers, tax returns, everything, year-to-date profit and loss, balance sheets, bank statements, I understand if they should take that opportunity or not, maybe more than you do, usually more. And you might know it already, or you have somebody else that you consult with in your business that handles that. But you have to understand your benefit exceeding your repayment. With bank term loans, which I'll try to get into here soon, I might have something else, but those can be longer term, 2, 3, sometimes 5, 7 year, choosing 1 year or whatever of your choosing. At times, not always, it's sometimes equivalent to the amount of time you have in business. So 5-year term, maybe 5 years plus time in business. There's more things on cash flow, business credit you need to have for those options. You need to have a 660 credit score, FICO Experian, usually FICO 2 for bank term loans, SBA, and then mix of FICO 8, 9, etc. And other ones, they want you to have a 680 credit score on all 3 consumer credit bureaus. FICO 2 score, check, usually is it, the scoring model for those. FICO 8s, FICO 9s can be assessed in the initial, and then other things get looked at, how you're doing your payments, how you're making your mortgage payments. There's a lot of other stuff to look at, credit card payments. Other times it might go down to a 620 credit score with bank term loans, depending on other considerable factors like your cash flow. Your cash flow has to be strong, and then a pattern of it, and then history of it, it's better. Those would require 2+ years time in business, 680 or 660. Sometimes the requirements are a little bit different. And even your business credit score, they'll look at that. And on this one, there is no business credit score assessment. And they don't report usually to the business credit bureau sometimes, but usually they don't. And that's not even a big thing. Why? Because you have other ways of building your business credit that doesn't require this. Business credit cards, vendor, supplier credit. There's different tiers of fleet credit, retail credit. It doesn't have to be this way. And there are other ways with business lines of credit that if they report to the Business Credit Bureau, it doesn't have to be this. And these don't always show up here on your personal credit report. Usually they don't, unless you've defaulted, of course. And that's another thing that I'll get into here in a requirement. So understand that the benefit exceeding your repayment, what's your ROI? If you're just saving money for a rainy day, this is going to be hard to justify having. If you're already at a loss, if you're already losing money, you're already low on balances, and you have to owe other people money, and the lender and I are looking at it, you won't be able to even pay us half, 40% is what you'll probably be able to pay. And then we're not even meeting 50%. So then you can cover your other cost of funds or your other things in your operations, your variable cost, your fixed goods, cost of sales. There's a lot of other things to look at. So let's come back into this document. So if you're falling behind on anything or similar for like a week or so, you won't qualify for month after month on your payments. If it gets to that point, it's usually already like past 30 to 45 days, we may be able to give you that. After that, it's like default, but it can happen even before, and you have to be cautious of the amount you do end up taking. So if you end up taking less to start, that's a good place to begin, and I'll get into that here soon. Current loan consideration, if you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. More funds, second to fourth positions may be available. If you have an existing cash advance, it will cause a reduction in what you can get. And if you had more positions, you may not get anything at all. This goes the same with all business loans or all business funding in this case. But if it's idle and then you only have, then it's okay. Then they are not correlated and shouldn't cause a reduction. People will ask me, well, I have an idle. That doesn't really have much to do with this. Even when you go get an SBA 7A loan, if you were to qualify, again, business credit requirements, they're looking at a 155 or 145 in some cases, a business liquid credit score, FICO, SBSS. A lot of people don't meet that demand. Collateral coverage, even if it's underneath 350, 500,000 where collateral isn't taken, but a lien and positions are looked at in a blanket lien that they're going to file on all assets, if not some, then that's okay. But do you have enough for what that lender wants? If you don't have enough coverage, if your credit is not it, the cash flow, the profitability is also something that we look at in calculating how much debt service coverage ratio you have. There's a lot of other things with other options out there. And there's supplemental documents like having to add tax returns upon tax returns, P&Ls, and more that you may not want to supply, but this one is less. This is about 3 months of bank statements or 4, depending on the state, a copy of your driver's license, and a voided check. So if you wanted something quicker now to then later to transition into getting like an SBA loan or a bank term loan to then refinance, I can help you with that. Or get another position that you needed immediately to cover your butt, to get out of a tight pinch, or to grow and expand, and this was your only option, then there is this as well. So there are different ways to look at it, and I can help you evolve, and or the person you went through to help you evolve through all of this stuff. But it will cause a reduction in what you can get. And if you had more positions, and that's what I said there, just making sure. Current loans or loan consideration part 2, the majority of lenders will not lend you another advance / MCA within 30 to 45 days. And the normal MCA, a merchant cash advance that I didn't say, those are usually based off your credit card statements and debit card, whatever's coming into a business. That's a traditional MCAs. What they're looking at is all the credit card coming in that's rolling into the account. But a hybrid or a traditional or another cash advance option is where all revenue coming into the account, and that's in your best interest to look at. So that's one thing. And one thing you have to also know is it can be predatory for some lenders to give you the wrong option. So be careful. A lot of people think it is when it isn't, and you just don't have the right understanding of it yet or the education of it. And so many people get upset with what they get sometimes. Not everyone, but once you understand this, like I've been giving you the education on it, then you know the expectations going into this, and then what you can do to evolve if you don't have the credit yet for something else, if you don't have the time in business, or you do, maybe you want this as a faster option and you don't want to supply documents, or you just couldn't qualify. Consolidation, for example, it can either give you a second position, or if you don't have one already, where you don't have to pay off your first one, or they give you a large loan or advance in this case and pay off your first, and you net the difference. So usually when you are making payments on this, when you've reached 50% or let's say halfway into your term duration, you can look at then normally refinancing by that point. Sometimes it's even earlier, depending on your payment history and depending on cash flow and other regards and how fast you needed money. Other things are add-ons. So if you just took an advance out and it's between 30 to 45 days and it's low, then that same lender I can go to and or the team and say, hey, this is what this client is looking for. Can we add on funds on top of what he has? Or has he exceeded his monthly revenue? And has he exceeded his monthly capacity to how much you can get, 16 to 18% or so of your monthly revenue, or how much you can get at advance? You don't want to over leverage yourself. And there are lenders out there who will do that. There are not experts, some of them, you have to question even them, the brokers or the agents, or they're just a partner that doesn't understand it too well, and they're going to over leverage you. I've seen people in forums and things where they've over leveraged the client over $1 million. They need to debt consolidate. Like, why did they put them in that position first? The client may not have known better. The agent or the broker may have not known any better, but it's the broker's also responsibility to stay educated and understand everything. And I have the financing, I have the accountability, the responsibility, and what you're looking for somebody. And I don't talk much. And here you see me going through already like 40 minutes because I want you to have everything to make sure you understand what you're going through. And I apologize if I haven't said, which I haven't. It's a little bit dark because I'm here in Washington and I have the window in front of me with the lighting coming through. It is rather dark. I have even an extra light behind me that I didn't want to get too close, but I wanted it to shine and make sure that there's enough for you to at least be able to see me. So let's go back into this document. And there's a lot of other things that I could have said right here, but I'll just give you as much right now. There's more to go through if necessary, but netting the difference, unless that you get a second position, a third position, wherever you are. And don't just take more money just to pay off the last position. That's, if you did that, most lenders probably wouldn't give you over 50% or 30% that goes towards paying off another position. You have to use it for the right reasons. For growing and expanding usually is it. So if you're using it for paying off positions, how much are you using it? I got to know the numbers. They're going to know the numbers. There's quite a bit. But not have a default with another advanced / loan company. Now, this is probably where you found yourself in already, or you haven't, but be very cautious of this. Regardless of how long ago, you usually don't get any more fundings in this industry with a default. Let me say that again. Regardless, and let me put this in actual caps locks, bold it, put it in 15-point font. And let me put it in red. Regardless of how long ago, here, I could just leave it like that. You usually don't get any more funding in this industry with a default. There are like 1 to 2 more or less lenders, and sometimes you see them appear and say, I can help you, and they're not legitimate. You have to be careful. They might have said, send me the bank statements and all this. Like, how did you even get my information? Yet you do it anyways. You have to be very careful with this stuff. I've seen a lot of contracts. I've seen people send me their contracts from other providers, and I go, that's not legit. Or if it is, I wouldn't work with them. I know how they are. They're pushy. Or if I don't, I know because of that background. I know because of what they're doing. And you usually don't get any more funding in this industry with the default. But like I said, there are like 1 to 2 or so lenders, more or less, who quote unquote may help you, but you'll start with a lot less if you get anything at all. There can also be a default with the judgment in place, which doesn't make it any better. You have any outstanding payment or payments, it's like mortgage payments, or you're looking at tax liens, you're looking at anything else. And I'm not going to start getting into all the different verbiage and technical words and definitions of them, but where your payments slide and they were able to take on the payments, the mortgage company, or a lot of other things that happen where you can be released, but you still owe. And that goes a long ways with the bank too. So if you are expected to make the payment, yet it was dismissed, discharged, or something else, I would still make what you can make the payment on if it is still expected of you to do. Sometimes it isn't. But make sure you're understanding of not going into a default with the judgment in place, a court order. There's a lot of other stuff. And when you default on a lump sum of funding, which this is, I'll get into like a line of credit and stuff here soon, which is still hard to get. No lender will lend lines of credit. So if you've defaulted, forget about the lines of credit. That normally won't work if that's the case for the most part. Background checks. Oh, one thing too I want to mention. Yeah, I do have those lenders, like I said, and there will be more on that, and I'll get into that here soon on just one of them here. But background checks, if your background report comes back with a criminal record or past financial issues and past UCC filings undisclosed, a lot of things I don't even want to get into right now, but I've literally seen everything. then it can be an automatic decline. But there's a reasonable part about it where if it was in the past, you change your ways, but not only that, but your business is where it needs to be, like revenue, cash flowing, and it's consistent. You change, like, okay, we're willing to take a look, but you might not get as much to begin. I've had companies come in where they're doing like 500,000 a month, and on their lowest 500 to 600,000 and above. And because of their background in the past, even if it's years and years, like if it was a default, fact is that you defaulted. The fact is that you've been through these issues, even if you've learned your ways, but they're not going to give you the most to start. You got to build that up too, and understand that if you don't get the most, you can build that. If there's a place for you to take what you can get, if the benefit is there, your ROI is enough. And if you can't, I understand that for different reasons, but not used for real estate investments like fix and flips, rentals. There's other options like the creative credit backed solution that I'll try to leave more information down below. If not, I'll go through this document or in other ways, but rentals, etc., passive investments. So that's something to be careful of because of the amount of cash flow, deposits, and all that, the activity of the accounts. Also, don't have issues with financial fraud or not have issues with this. Financial fraud, past default, and past default judgment in place. Submitted altered bank statements to another lender. If you're late on a mortgage payment or payments or other payments, it makes it hard to get. I've seen all this right here. And there's more. I just listed some of them. But these are some of the most common ones that I've seen. I've seen so many submitted altered bank statements, some not too long ago, people lying out of their teeth. And I get why. You don't want to feel embarrassed. You don't want to be discovered. I get it. And then sometimes you're not trustworthy or truthful, and it could be both, honestly. I've had clients who it's hard for me to give my trust to anybody. I trust somebody when they take the action. I'm a action. You don't have to even say it to me if you're not going to do it. Just don't even say it to begin. Say it to yourself. Don't even say it out loud in your brain and take action on it. That's what I praise. That's the type of person that I go, I'm going to go even miles for that person. They already had this at my desk in the morning. They had already submitted that to be reviewed before I even had asked them to do this. And if there's a reason you ask for something, that's okay. That's understandable. But how are you doing things? I've told people I run a tight ship because I have a high standard now. And I get that. I was once average. I remember that. And I hold people to a higher standard, and that's fine. And I get it. I put myself in your shoes. But do you put yourself in mine and ours? That's the real question you should be asking yourself. Because is it most important to you whenever you try to contact somebody when it's convenient to you? When I was waiting for a week or 2 weeks, and that's unacceptable. It shows me who you are as a person just by that alone. And I question things if I really wanted to work with you. I know I can help you get the very best than the majority out there. But at that point, it has to be very, very confirming to me. Not convincing, but confirming to me. And I don't just work with anybody and everybody in all cases. I built myself a huge personal and business brand, I believe. And I'm thankful for those who have helped me along the way. And it wouldn't be possible if it weren't for you, and it wouldn't be for others. So I'm very grateful and thankful for you and those that have been there for me to help, and they've been able to help me in getting to understand you and getting to understand your needs as a person, in business, and more. But I've seen so much of this. Be careful. It gets caught in the process. Maybe very seldomly does it go through, but for the most part, like 99.99% of it, 100% even that, don't do that. You'll be on the lender's radar. You'll be on even what's called a data merge list. Like, this person is not trustworthy. They've defaulted, financial fraud. There's other reasons for it, and it's hard to get out of there. Sometimes other companies put you in this system, and not rightfully. So I've had people come back to me and go, hey, Michael, somebody put me here, and I tried to get them to release me, and I tried to go through the cash advance or this other company, and they didn't tell me anything because they don't want to be liable. They know they can, but it's in their benefit not to. And then if they ever needed you to go get funding in the future, you can only go through them. You have to be very cautious. Additional concerns for a denial. They're looking at, or the lenders, and we're looking at this month's current revenue corresponding to the month you are applying to make sure you have enough revenue and deposits, and the month to date revenue is enough so you can support the payments, the advance, the loan, whatever it is. And if it's like the 15th of the month or so, sometimes a month to date transaction report and other things are needed to be required. But that's what I wanted to mention here for that part, and understanding how much revenue you're currently bringing in the month, to see if it's substantial for how much the lender wants to give you. If there's a drop off where you're doing, let's say 30,000, then you had your current month is now at 10,000, but we're at the 20th of the month and you're not consistently depositing like you were, like that can drop the approval or not approve you at all. By a 50% dip, that's hard to approve. If it's 20, 30, like, okay, 50% plus at times, yes, but having to be taking cautionary measures is most important. So here, it depends on the time of the month you apply. Best to apply earlier in the month or so, or when you have the highest amount of deposits and it's consistent. It's been consistent. You have a pattern. And we know that going into the next month, this is how your start of the month will begin. This is what you'll have starting, ending. These will be the amount of deposits very likely. You brought on a different revenue stream. This is what I predict. This is what I know will happen. Unfortunately, with the month-to-date revenue, half the month gone, was too low to fund. That can be a reason you get declined. Another thing is if you're applying in the current month, and when we or the team tries to get you to the bank verification and decision logic check, and this is what happens, there's stages to it with bank verification to make sure the account is in good standing, the lender checks, making sure there's the deposit into the account. This is all like final verification stuff. To issue your funds, ACH check, there's different ways depending on a wire. It says an A tier lender, B tier, C tier, D tier. There's different tiers of lenders for you. That's why you have to be careful of just going anywhere and giving your information. An A tier lender you applied to, but you're a C tier lender, like there's a reason why they declined you. Maybe they didn't give you the reason. I have the reasons. I work with a lot of direct lenders. I also have indirect lenders. And at times, many cases, actually, in the market, it's best to submit it underneath a place that houses a lot of lenders so you get the best look. I already have a lot of these direct lender partnerships and what's happening on the back end for review and everything. But it's better to do that so you get the best option for you and what's suited for you. So let's say you're a construction business and there's 3 lenders that I know it's best to suit you with, myself and or the team that suits you with, and then based upon your cash flow, your revenue, and other components. And then out of those 3, we'll battle for your file or something similar. But the one that we really wanted was this one. They ended up giving you more after the other 2 decided to give you this or backed out. And now you got more than what you would have gotten somewhere else. So it's in your best advantage in a lot of cases to do it like that. And that's what I recommend the majority of time, honestly. But not every one of those places is created equal. And I found the very best to help you and a lot of different providers directly and indirectly. So there's that for final underwriting. And to see too many negative days and you're minus in your account and badly and more things like these, this can cause us to decline a file, cause a team, cause a lender to decline it, the underwriter specifically, and or lower the amount. But that's a lot of the times it results in a decline. If a bankruptcy Chapter 7 on the business is not good and usually will result in a decline unless you had it discharged. So right here. And if it's a little hard to look, I apologize for that. I'm trying to, maybe I can zoom in right here. Maybe that works. I'd have to zoom in from here, but let's just leave it at that. I can use it on my laptop to do that. And discharge, we are willing to consider. It's better to have a bankruptcy. So it's dismissed, discharge. Discharge is what we're looking at. It is better to have a bankruptcy past 3 and even 5 years, but better 7+ years. If most recent and not taken care of you and you don't demonstrate enough revenue and a good account or accounts and then some, it can make it hard to get approved. So anything in a chapter like 13, there's a chapter 11, the right bankruptcy, chapter 7, you want to make sure if it's a bankruptcy on your business that usually it's 3 to 5 years in between and past, but better 7+ years. It's just hard to fund any business. If you started a new business or you filed for bankruptcy, yet your business is continuing to take on clients or do other activities, like that will show, that will be looked at. Everything is reviewed. I've reviewed a lot of credit reports myself. I've done a lot of things with bank statements, like I've said, and I know my stuff in and out, but it's hard to do that. And then you start your business under another name, even when you default, but I have another business, or that was 5 years ago. It's hard to justify that. If anything, they're going to give you a very low amount and prove yourself. You get 1 month, 3 months, you cannot make the payment, default again, too bad. Like that was you caused in the past. So why should they take a higher or better chance on you until you prove to them? And it's a lot of it relationship stuff. So you want to make sure you have that relationship with them. So it's better to have all that. For trucking transportation clients, this is kind of on the side, but I wanted to make sure I got this out of the way. We're going to get into approvals here in a second, but approvals are typically 50 to 75% of your monthly revenue, usually the lowest month. So if you're any like trucking or transportation, the amount you get approved for varies. And if it's your first time getting an advance, it's typically 50 to 75% of your monthly revenue, usually the lowest month, and then considering the averages. So taking the lowest month and then taking the average, how close are they and how much can we lend? And then cash flow. There's a lot of other stuff to look at. The lowest monthly, lowest mostly, especially when revenue is lower there. If it's low, your first funding ever in getting an advance. If not, and the account looks good and strong enough, usually the second time around and more it's higher, potentially like 75 to 120 or so, but not set in stone. Most approvals in general for other industries are 75 to 200%. So you can work your way up there and get approved 50 to 150, 75 to 200%, or 100 to 200%. You'll see too. It depends on cash flow and balances, and there's a lot of other things to look at. And the use of funds are a big thing for me to understand. Note, the amounts here that you can get are up to 2 million and above, or if it's somewhere else by the time you're watching this, but it could go 2 million, 5 million, and it just varies depending on the organization, the lender, and different needs to meet. But usually you'll see up to 2 million. Doesn't mean you'll get to 2 million. It just means that's how much you can get in funding if you qualify for it. More on that below. So I'm not saying you will get 2 million. I'm saying that there's up to 2 million in funding. Now, if you are a client that does 1 million or above, usually that's where we can try to get you closer to 2 million. And it becomes a lot harder because at 1 million, if you have problems with that, generating that, and there's so much withdrawn out of the account, like getting the 2 million first is going to be hard to do. And there's a lot of other stuff to look at. How it works. So I have a special hybrid cash advance. I wouldn't say merchant cash advance, but that's how it's operated and technically. But cash advance company, lender in partnership with the best direct and indirect lenders for an in-house look. Best and most recommended way in this market for getting you the best look from the lenders while protecting your privacy and not hurting your credit. So it's a soft pull, usually initially, and things always change in the market. So for a big time, it was always through the whole contract signed. It was always a soft pull. Sometimes a lender could still do a soft pull, if so, unless things change. But for the most part, you're starting to see a lot of these lenders tack on the hard credit check at contract sign. So you also have to be careful when you go somewhere else. Usually when you go through me, you'll tend to get the best option. I've beaten a lot of people's offers respectfully because I know what I'm doing and the team knows what they're doing. And so you are in the best hands. So usually you'll get that disclosed to you. There'll be a hard credit check, but just understand if it were to be or not to be shown, that a lot of the times on that offer agreement, on that contract agreement, then that's normally looked at as a hard pull, if not already. But that's just the commonality. If you go to a bank term loan, you go to a bank in general, you'll get business credit cards, all this other stuff that'll happen, even happen sooner than when you expected and not as predictable of what you think you might actually get in most cases. So only choose one of the lenders that is best fitting, or if you only had one lender option, then that'll be the best for you to go through. And for flexibility and maximizing your funding and going to work on the back end to get you the best, that is generally 50% less expensive than everything else out there. Even some term loans that are longer where you thought it would have been less expensive, but you're paying on interest. Think about a business credit card where you are paying, sorry, I know it's getting a little bit dark, like the lighting, but we'll make do with what we have. You see this here. Sometimes this happens. But you have to understand that even with like a business credit card and paying on interest and what you have amortized in your remittance schedule, that adds up month over month. Look at a line of credit, how that adds up month over month if you're not paying that down to what your statement due date is quicker or your closing date is coming up and now you have an extra amount. And so you have to be careful of adding too much. And sometimes they overcharge you with fees you have to be careful of. And other times it's okay because it'll spread out the cash flow. That's why you want a longer term and be able to use those funds when you need them and not have to just use them all at once. So there's a benefit and an opportunity cost trade-off to everything. Especially unsecured business term loans and traditional merchant cash advances. Those can be even more expensive to you too in most cases. Plus, the lender is not taking a future percentage of your credit card and debit card sales like a traditional MCA. So you don't have to worry about getting it taken out more if you make more sales one day and less for a day, you make less. And there are no interest rates. It's calculated on total payback. There are a factor rate. I'll get into that. Also, you can deposit in more ways than just credit cards. You accept from your customers, such as cash, ACH, checks, and more, and not just based off your credit card receipts, which is great. The potential here, like I said, 100 to 200%, or sometimes 50 to 200, 50 to 75, 50 to 150, or up to 75, 25 to 75, depends on the lender, a little bit more out there, of your lowest monthly revenue and in the last 3 months or 4 months, depending on the state. And we'll also take the average into consideration. So I give you an example there. I won't go through all of this because the more we have to cover, we'll get done here soon. And so 30,000, averaging 40,000 with like 470,000 in annual gross revenue at an average daily bank balance of 5,000. It's best to have 1,000 of an average daily, but average, I would recommend 2,000 as the market picks up, and you might see even 3,000 in certain industries. But we can still have a look, if not, but harder, that you can get between 15 to 60,000. Not saying you exactly will, but projection and more or less. And if you're not in trucking, that's kind of what you would see, unless 50 to 75%, more or less. But don't always expect the most. So 30,000, getting 60,000 when you're all over, or it's not consistent, or it's not predictable, even getting that when it's predictable. Without a relationship, you might start off at 40,000, 45,000. You might start off with less, with average balances, and there's a lot more to look at. So can you take 40,000 and make use of it, expecting 60 to 70,000? If you were expecting 100,000 and you don't have collateral, you don't have to offer up collateral. That's why these are a higher risk too. And based off of credit, no, it's not based off of all that. There is leniency to it. So they're not asking you to put up collateral. If you wanted 800,000 doing 30,000, that's not realistic. And you have to have equal to that collateral, real estate, commercial, residential. And then there's even more that they have in contingencies and contracts and what you can and can't do with this funding. And so you have to be cautious. And here there's more flexibility on how you can use your funds. So at times up to 110% or so, can be higher depending on your business situation. If you have another position, past borrowing, etc., to start, come back and get more right away if need be. If you pay it off fast with early payment discounts, more below, you can use the funding for the duration of your term. It can be higher or lower depending on your business situation, as well as depositing and more like your industry, bank statements, starting and ending bank balances, average daily bank balances, the other positions. If it's your first time getting this type of funding, to establish a relationship with the lender, the market, the economy, the inflation, the rates, the industries, projection. There's a lot of other stuff that we look at too. To start, more on the lower end, if your projections are going down, like decreased revenue, recently projecting down, as well as average monthly revenue. And if you have unstable cash flow / bank statement concerns, like average daily bank balance and average daily sales is continuously low. And when it's too low compared to your deposits and revenue, it doesn't justify giving you more, and more goes out than you keep in your credit and more. So withdrawals, deposit more than when you withdraw. If you start withdrawing so much, maybe one time, I get it. When was it? What was it? The type of deposits, POS system, other stuff you have going on, transactions. So average daily bank balances that are too low, for example, not based on your file, but just as an example, you have 1,000 on average, but you do 5,000 a month, 50,000 a month. That's a big reason why you get more on the lower end, like 1,000 doing 50,000 a month. There's a lot of reasons why you're at that position, or it's always been that way. And also you only get 10 to 50%, 15% of your annual gross sales, and sometimes up to 20%, but more in the 10% to 15% range a lot of the time. Payment history earns you more. Add-on funds are available. Receive funds time and time again. You get early payoff discounts and a personalized account manager to help you every step of the way. Can be there if possible. No, if you do not get all the funding you want in one shot, like I said, don't worry. What I tell business owners to do is to take what you can get, and then in about halfway through, or if there are add-on funds between 30 to 45 days out or more, then you could potentially add maybe 2,000 to 5,000 more or less if possible. And when you paid it off at least 50% or the halfway through your maturity, then we can take a look at refinancing and getting you approved for more funds. So pay off that position, stay at a true first position, or if it's another one, you have multiple. Okay. Now you got 30,000 initially. So next time, or let's say you got 30,000, maybe next time we double that. Now that we know your payment history, how much revenue you'll be bringing in, now we can push it to 60 to 70. Maybe next time we give you 40, 50,000 based off that. So there's quite a bit, and that's how you work your way up and building the relationship for them to trust you, for me to trust you using those funds. And then approve your better terms, rates, and give you a higher amount. This is what a lot of business owners do, myself included. I've done this in the past. I rely on business credit a lot of the time now because of my credit where it's at, and I've accumulated a lot under that. And I'll try to go into that here later, but they require more in terms of better credit, and then you might not get as much as you wanted to. If you had the revenue in your business, you can generate more, you get more from that. There's a lot of other things to look at in adding those two together and more. Also try to add a line of credit to get you access to more funding and vice versa. This way you can withdraw and use the funds as you choose. So for any stationary cash flow gaps or for ongoing needs, something abruptly comes up, then you have a line of credit. And I get what those are used for. You can use them for equipment, leasing. You can use them for a lot of other stuff, a down payment in a way, for different material, different supplies that are on different payment schedules. But usually a lump sum you can use as a down payment. And that's what a lot of the times most people would end up doing. And this option is later below, but keep reading this one and it will be harder to get. And it's hard to work with it if your credit isn't there. And I said a little bit earlier, like 660 credit, 620 sometimes we can work with, but you have to be in the right industry, cash flowing in enough. Credit has to look like spectacular at that point if you're 620. 2 years plus time in business, sweet spot doing over 250,000, if not 500,000 and above in yearly revenue, gross revenue. And there's a lot of other stuff to look at. And then these things can change. So another factors is also the asset-backed funding that I'll try to go into a little bit later below, but it could be hard maybe, or it's open. And the 3 C's of capital that I normally go through are credit, cash flow, collateral. You either have one of these 3, 2 of these 3, or all of them, or 2, or however you look at it. And that's how I look at things, liquidity, equity, and there's other factors in determining what the best solution is for you and what you can work towards. When I ask most business owners if they really need everything at once, most of the time their answer is no, unless it's a project or projects where you are required to have it all at once right away, like your material, you're building a residential, or you're building a commercial property, or you are doing an ADU unit build or whatever it is, and you needed to somehow go through this option. And I help people out with like new construction, by the way. Real estate investors get fix and flips approved, multifamily, and all these multi-units, duplexes, commercial, residential. There's quite a bit. But here you see this. Unless it's a different story, then we can look later. We can look later below for collateral-based options. What you don't want to do is start stacking. And stacking advances loans means when you get approved for one, you go ahead and get another one right away. Or you came to me or someone else already had another loan or an advance approved for, or you were planning on approving that or the other one, but you don't want to do that. That's looked down upon. Some lenders will let you do it. Be careful. Usually they're not legitimate. They're not going by, if they are, they're not going by the best practices, and they'll get found out. And in the short term, a lot of these companies don't last. It's the longer term ones that do. And you have to look at the return on investment from both sides, not just from you, but from the provider, the lender, in the organization. If they were just giving you the best rate all the time, they wouldn't be in any profit. They wouldn't be able to stay in business. And you're already a higher risk. So everything has to make sense. For another approval to add on top of it and try to take both, that will get you disapproved normally. Again, you get 4 to 24 months to pay back the advance, or it's 4 to 24 months if you're seeing it for the first time. And these are shorter term. That's why I say they're faster. There's other options where they're past 2 years, and I'll try to get into that here soon. I'll maybe leave this document or more information down below. And I might have an individual video that goes over the terms and rates, or just the rates video I might leave down below too. If not, that's okay. But give you more than enough time. And if you needed more than 2+ years, there's the online bank term loan option, SBA loan option, but it may not work due to credit. If your credit is not 675 for like an SBA or 700, sometimes it's less, it can work, but it's hard. With the business credit, liquid credit, the credit score, the credit scores, all reports, and cash flow, profitability. It's more based on cash flow projection, profitability now than historically, but you still want to have that. Be in profit, preferably the last 2 to 3 years. If the most current one, we can still take a look at, but it can be hard to justify giving you enough. You might not get all that you want, all the paperwork. There's quite a bit. Some personal term loan / credit line service on your own, and or with someone who can apply with their credit and take on the debt to help you, or raising your own credit up to like a 680 or 670 plus on all 3 consumer credit bureaus. And there are no collateral there's no collateral on that, as well as some collateral solutions too. So if you wanted more than 2 years and you couldn't qualify for a traditional bank term loan or an online bank term loan that I have, and I have many lenders, and the SBA loans and other associations like equipment, you can use this option, or a personal loan, then you can use this option. And it's always recommended to, and a lot of the times this is in your best interest to use, but the alternative to this is using a personal loan. So if you didn't want 4 to 24 months, then you'd have to have better credit, because personal loans come with about 1 to 5 years, and it's based off of what your personal returns are in your history, at least 2 years, or if you're not running a business yet, what are your pay stubs and other things that we look at, W-2s and things to provide. Are you generating enough? And that's a whole different category, but that's an alternative too for 4 to 24 months. That can be a higher risk profile, but then you have to have better credit, 680, if not 700 plus FICO, Experian, not Advantage score, not these other ones. And then they even look at the other credit reports. And if you're not where you need to be and everything, and it doesn't pan out, debt to income, it can cause a disapproval. Equipment financing specifically, or you can go through the SBA 7A. Maybe it does, maybe it doesn't work. And other SBA loans may not work due to credit and more, and have 2+ years of recent profitability is best. And you need to have at least normally a 675 FICO or 700 plus for most, with the one at 660 plus. But just keep in mind, before I break down some numbers below, that with longer terms like 1 to 2 or 2+ years, you can get a higher total cost of financing over the course of your loan, paying unwanted and unnecessary interest, as well as the amount you may get approved for, and it can take longer to get. So you have to get the financing side. You have to understand, not only from my side and our side, but do you understand your budgeting well? Do you understand your accounting? Do you understand your finances? Because anybody can say, I want 5 years, but when I look at everything, I go, you only really needed was 8 months. Build 8 months into then another 8 months if you had to, and then build that into another. Don't always just take money to just have money. I get it for bridging cash flow. If you couldn't get a line of credit, but you had a longer term, then you can use that and put it in a separate account that you're maybe paying already on, or you open up another account and kind of use it like a line of credit to withdraw from if you had to. But there's a lot of different things to look at. Ongoing project needs that you'll have, so you'll have that ready. Your ROI won't be as quickly as you anticipated, or it wasn't going to be to begin with, where let's say you had a project where it's 2.5 years that you're going to hit a 200% ROI, and you won't be anywhere close in the 30 to 50% in the next 6 to 8 months or 12 months. And what you're taking is not going to give you a 40% gross from that, or 40% net profit margin from any of that. And so you got to look at that and think 40% net profit margin, gross profit margin is this. And in my payments, I'm paying back $45,000. It's already more costly and expensive, but my gross is this. I'll be able to net this amount, and this will be fluid over the next 3 to 6 months. It'll be consistent. You got to look at those things and understand where you are in the market. So your payback amount is between a 1.18, excuse me. Been in here for a while, not much of a talker. I would say let's go take a break and come back, but I'm okay. So your payback in amount is between a 1.18 to about a 1.55, your advanced amount. So for example, if you get $45,000 to start, could be less, maybe it's what you asked for, through because of the term and credit, as well as revenue, cash flow, and other factors to start. And again, positions, experience, and getting this funding. If low revenue and if fluctuations, that's another thing. How are you depositing? You have if we looked at the last 3 months, we said October was 50,000, and then you had November then at 20,000, and then you had December at 40,000. It's like you're not even close on average, like 50, 20, 40. That's scattered. That's a huge drop. That's 30,000 in the middle month. Now, if you had 50, 60, 70, and you're growing like that, that's better. 50, 60, and then down to 20 in the most recent month, something like that, or less, or more or less, like that doesn't look good. You might rebound with the money you get, but there's just too many inflection points for us to give you what you were asking for. So be cautious. So the number of deposits, if low, previous defaults, we have to be cautious of a lot of that. And come back and get more funding after paying 50% of the balance, or add on funds before, then we may be able to give you even more, double the next time around, and try to lower the rates, increase the terms, and do more to add a second position after 30 to 45 days or so if needed, which can be of help to you. And I can help you with multiple positions too, or if just one. Your payback is between 53,000 to 53,100 to 69,750. So on this 45,000, you're expected to pay back between this 53,100 to 69,750. And this is just not in stone yet, but there's other mathematical formulas and things that come in that's on the back end that we're all doing, that things are getting done on the back end from the team. So sometimes a bit higher if two of a higher risk and you've been declined everywhere or have another position. So it could go up to like a 1.69 where you're paying even more than 69,750. Use this money to grow and increase your revenue, and your benefit exceeds the repayment. Let me put this again. I said this earlier. Some of you will think, I don't have enough cash flow. I don't think I can sustain the cash coming out of the account if I have to make this payment. And then I have credit cards bills that went up, rent, mortgage, all this other stuff, leasing a building, $30,000 to $4,000, insurance premiums, fuel. Like, I get it, but I also have to understand, can you cut costs somewhere? And yeah, when I look at businesses, I look, yeah, renegotiate that contract. Work this out with the supplier and this vendor. Get a new one. You're switching over account receivable factoring companies to a direct shipper or something else where they work this way and may not work all the way you wanted it to, but it'll lower your costs. It'll lower your shipping fees. It'll lower from a payment coming through in 45 to 60 days instead of 30 days. And incentivize your customers to pay you faster. Give them discounts. Give them bonuses or things that come with this. And I can help you with a lot of this in time too. So given the funding details you submitted, you may have what we call C paper, which could get you 7 to 11 month terms. It might be 12 to 24 months, but you'll get 7 to 11 month term. And I'll get into some of the underwriting here, between 1.31 to about a 1.55 rate. You're still high risk. To get 12 to 24 months, you want to be doing 50K plus per month. And for rates between 1.18 to about a 1.30, sometimes they go up and they're a little bit elevated in the market. You want to have like a 700 plus credit score. A lot of the time, 720, 730 is better. If you have 751 and above, way better. And you'll know the exact terms and all you're getting after we've been able to review, after the team's been able to review your application and the documents. So I can't say exactly what you'll get, but it's a soft pull to begin to submit your application so it won't affect your credit score. Plus, you have to start somewhere and move up so the terms can then be increased, decreasing the rates and get you more funding. And remember, with me, you're working with the best lender and lenders partnership. I already have a lot of these direct lenders. If I go through this partnership here indirectly, I already know who those direct lenders are and everything that's being done on the back end and more that they already know about me and what I can do and help them personally as well as in business. And remember, with me, you're working with the best. And again, the network in the space. If your benefit exceeds your repayment, then it makes sense to move forward. And others. There we go. Sorry. But for example, not set in stone. Let's say you get $45,000 to start at a total payback of 1.332, and that's putting it actually really low. Like 45,000, if you're a high risk already with credit, with average daily, there's a lot to look at. But I'll try to get into another example on this here soon. Your industry, credit, revenue, and other positions, if any, past defaults, if any, if data merge, economic conditions applying to too many places, that also brings your rate up and it can decline you. I have so many clients right now, and this is a big issue than it's ever been, that you've been applying to too many places. So when you do come to me, I have to ask you, have you been applying? Have you been declined in the past? What's the reason? Have you been giving you the full reason? They don't always do that. And from there, I'll better understand. Can factor in, and there's much more. Within 9.5 months payments, then your payments will look something like this. So if you were given a weekly repayment, because again, these are daily or weekly because it's already high risk, there's monthly, but the way you're depositing is what you need to look at. So if you're depositing frequently, like this shouldn't be an issue getting a daily repayment of $297. You deposit $3,000 on average after you're withdrawing and after every other activity. And what else you deposit in the account, maybe you're left with $1,000, but $297 of that $1,000 getting taken out. So $800, $750 plus more or less is still left in the account. What do you have to use for that $750? Can you spread it out? Can you cut something low? Your cost of goods sold, your variable, your fixed costs. As these things change, as your demand changes, as your product changes and it evolves, your revenue so should as you get into a different market. There's a lot of other stuff to look at. And if you're depositing biweekly or weekly and you're getting out $297 and your expected payment is $1,487.85 per week, can you sustain that? That's what you have to ask yourself. Even if it's not what you wanted, but this is your only option to get you to where you need to be, this saves a lot of people. And it's not just about saving. It's about growing and expanding your business. And even at the cost sometimes of your cash flow getting a little bit less than what you wanted it to be right now, but for later, when you start generating the revenue you will be generating, just imagine that. And what would it feel like if you didn't have this in your hands? You would lose out on opportunities, or that one opportunity to secure a contract or multiple. You're going from residential to a commercial. You're going into a hospital to do more cleaning services, and you need the materials and supplies. Each payroll or each person on your payroll, wages paid, labor costs, a lot of other factors that we look at. And if we look at overhead and if we look at the expenses of the business, I can better understand a lot of this. And for each person that brings in per week, maybe it's 2,000. So now you have how many people? 3 people. So 2,000 by 3, that's 6,000. By 4, 24,000. And that's what's helping you generate revenue is 3 people extra that you'll add or that you already have. So 24,000 on top of everything else, probably generating 50 to 60,000, if not more than that. So then you look at your cash flow deficit and you see, well, could I lower this a little bit? There's an employee who isn't meeting their demands or they're holding us back. And you also have to think about those things. And could I have somebody in that comes in as more efficient, that I can just have them starting first? There's a lot of other things to look at. And I get sometimes it's hard to move pieces of the puzzle, but these are just some of the things to look at in the business. Bi-weekly, then that means 2,970. Monthly, that's 5,940. And I know that's high. You look at that and you go, well, some of you will think, and then it's manageable. Even if it's high, you're like, I'm generating 100,000 and you're telling me I can start off with this. I can way more surpass that. And it's not an issue, but for some of you or a majority will look at that and think, yeah, it's high. And I'm not saying it isn't, but these are already high risk. You're already a high risk client. You can't qualify for a personal, and even if a personal loan that you can use for business is not always in your best interest and how it would appear on your personal credit. And then your debt to income and a lot of other stuff. And you might want to pay it off earlier. Sometimes they don't let you pay it off earlier. Other times they do. And so without a penalty, but usually it could be no prepayment penalties on those too. So you look at that and you reverse engineer from here and you think, what would I be depositing? What am I currently depositing? What are my margins? Am I going to get thinner on if I am expected to pay back on a weekly repayment? How much profitability would I have? How much cash flow would I have remaining? Am I recirculating my existing cash flow, my profitability in my business? So there's a lot of other stuff to look at, but this is very reasonable. Other times you might see 100, 200. If you generate less revenue, we're not going to over leverage you, but if you can afford it, then there is that. And if you get multiple options, that's another thing. Sometimes you have presented multiple options and also within different states. So we might say 50,000 or you want 40,000, you can get up to 80,000, up to 100,000. So you chose 30,000. This is what it'll look like, 40,000, if possible, if negotiation in that as well. Overall total cost of financing, so 5,940. And I actually moved this number around because I was moving some things. But if we looked at the 9.5 months instead of 10, and what I want to draw your attention to, with 10 months to begin, if you have no experience at that level, you're getting 45,000. It's sometimes hard to get. Sometimes you'll see 10.5 at that point. If you are trustworthy enough and you have the experience, or we know you have the right amount of revenue and deposits, the lender will try to give you like 10.5 to 11 months, but don't always expect that to start. It's not always as simple as getting 10 months. But let's say here it was at 9.5 months. So it's simple. And I do more math stuff on my end once everything officially goes through. And it's also perhaps already provided on the front end, or it's given on the back end for the team and more. But here, 9.5 times so you're expected to pay back not by 59 on the 10,000 on the 10-month example, but $56,430, which your cost of funds would then be $6,430. And you can pay it off earlier if you can. That's what a lot of people end up doing anyway, so they don't have to continue to pay towards all of that. And the cost of funds are still there, but no prepayment penalties, and usually have the best payment discounts. I usually have that. And then with the team, out of what's out there, I know a lot of people are looking for that too when you're comparing. And you don't have to go out there to compare. A lot of people, when they come here, it's usually the last destination and the best destination that you will have. Make sure your benefit, again, of using the funds exceeds your repayment. Like I said before, the ROI is going to exceed what you repay. If you don't justify that, it's hard. You're breaking even. It can be still hard, or you justify. You're underneath it. Doesn't mean you wouldn't take it, but I don't always recommend if this is what it's going to end you up with. But if you really needed to get out of something to pay somebody, like, I got to take a little bit now. I'll take a little bit, or I got to take as much. And I know I'll be fine. Once I get this out, I'll be back in revenue. There's a lot of other stuff to look at. Otherwise, you will never justify doing it. You'll be one of these people who keep coming to me and have the most unrealistic expectations, but you're getting the education here that they are not or have not yet gotten, excuse me. Be realistic. I've had people whine, complain, and it's not my fault. I'm the messenger. I didn't create the rates, but I understand why they are the way they are. And I actually approve of why they are the way they are. If you turn this into an amortized traditional APR, you'd probably see 100 to 200, 100 to 350%. And I know how you're thinking, and you're saying, well, dang, but in the scope of things, in the scheme of things, this is one, easier to understand, and it's not a traditional loan. And the factor rates are very reasonable. It's simple to understand and what you'd be paying back. There's buyer rates, sell rates, there's things that I understand and more on our side, and how this would be then if they upsold this, or if this was the amount that you took, this was what then it would cost for the ROI of everything to make sense. Make sure your benefit exceeds your repayment. You will never justify doing this. You're continuing to complain. I've seen people, and I communicate with, help out a lot. Well, I was in the transportation and I'd never taken MCA, and I advise nobody. And I asked them, how did you use your funds? So in the operation of your business, you already didn't have enough free cash flow, yet you took more and you over leveraged yourself by paying off debitors. There's creditors. You're paying off, and you're paying you down your lease agreement. What was this ever used for getting a piece of equipment or a down payment? Like for a trucking space, did you not, like, what'd you expect? You didn't take it to say, now I have another truck, or I'm applying this towards a down payment, or I'm getting the truck with this. And because your truck is your main generating revenue stream, I'm going from 50,000 to 60, 70,000, 80,000. Now I have a dump truck or whatever it is. I have another employee helping me generate more revenue. My marketing and advertising, I'm putting $15 in and I'm getting $30 out. I have a 15 to 1, 1 to 2. Here's your advertising spend. Here's the traffic coming in. Here's how I increase my volume. I look at all that stuff myself in my businesses. And I understand my numbers. It just takes time for you to get this. And for startup stuff, I know this isn't all that. I'll try to mention that here as we move forward on what is best suited for that. If you're doubling, tripling, quadrupling your revenue and exceeding the repayment, then it makes sense in most cases, and that's actually the majority. And to get to your ROI, it makes sense after I ask somebody like, okay, yeah, you're going to be at 80%. You're going to be at 100%. You're not even at full capacity of what you've done. You'll be at 150% in 3 months. Okay. And even if you're not, but need to fix things or get back on track, you can do so if it makes sense. Know your ROI, return on investment, for the next 3, 6, 9, 12 months plus. And if the percentage is greater and you can even create more cash flow with it, and if it's not as much or not but break even, then it could make sense, even if you go a bit backwards, to then go back up right away, then it can be helpful and have a good use for these funds. I've heard every single reason literally out there, and I can understand, and I ask your numbers, like, if I see it, bank statements, no. You didn't look at this correctly. This one needs to be addressed. Over time, we can improve your terms and rates and get more funding, and even later on, as I can help you with your credit and business credit, then later when you have better scores and revenue or anything else, you need to refinance things, then we can revisit that. Debt restructure, there's reverse debt consolidations, which I don't always recommend. Debt consolidation, are you in position to do that underneath a bank term loan, SBA, or anything else? I'll help you with that stuff if you needed it. I've done a lot through there too. If, let's say, you took less to lower your repayments, and if you were to be approved for less too, if so, at 40K, and I'm just going to draw the example here at 10 months, we'll leave it at that. I said 9.5, but let's leave it at 10 months. So that's a daily payment of $268, but you're getting weekly deducted $1,340 if you got this. Other cases is daily, and I'll get into underwriting here soon. But even if it is daily, which you see a majority of it, just expect that and prepare for it. That's the best you can do. Bi-weekly, 2,680. Monthly, 5,360. Or let's say 440K at 9.5 months, that's $282. So here we have a jump from 268 to 282. And that can be a lot for a business owner. I get for this side, it kind of looks small, but it can be a lot. A $15 to $20 difference is quite a bit. That is paying your utilities, added towards your utilities. That's towards your production costs, manufacturing costs, your distributor. There's a lot of other stuff. Weekly, 1,410. So now it's not 1,340. You brought it up to 1,410 because the term dropped and maybe the rate increased. So that's also something to account for, is sometimes when you see a larger amount, there might be a lesser of a rate, sometimes higher too. But when you get less, there might be a bit of a higher rate because to compensate for the ROI, and it's too high of a risk to give you that at the amount of the term when you pay it back fast enough. And there's a lot of other stuff. Bi-weekly, 2,820. Monthly, 5,640. So now you're paying more than that. If like 40K at 9.5 months with the 1.32 rate, then a $277 payment weekly. You see that? I'm just going to quickly go through this. If 35K at 9 months, another thing too I want to draw your attention to, we already went over this, but let's say it was, here, let me see if I can find one. Here, let's say 40K at 1.43 rate with 9.5 months. Then that's daily, 301, weekly, 1,505, bi-weekly, 3,010, monthly, 6,020. So many people can justify that. In other cases, you might not be able to. Again, it makes sense to the clients. You're not each and every other person. So where your thoughts on this are different, it's different to someone else if they should take this or not. And so you'll see that. You might see 7 months. So if you see like 7 months, depending on your risk association, or you might get 8 months. It's common to see that a lot of the time is 8 months or 8.5 at that rate. So let's just say it was a 1.45 this time, and you were paying back that on 40,000. You're paying back 58,000. So you're paying on your cost of funds, or in total, you'll say 18,000 in 9.5 months. And I know to some people that's ludicrous, but your ROI is going to be more than the 18,000. Does that make sense? So let's just say you have 40,000 and your buyback rate is 1.43 and 9.5 months. Usually we do it in a 20 to 21 day in a calendar month is what we try to do, although it's 30, 31 days. But for business days, so let's just say, and we give you better with 20, sometimes it's better to do that than 21. So that's also what you need to look at. So let's just say it's 190 days. So let me, and take that and do it by 190, you're getting 301. So 40,000 on the 1.45 example, that's 58,000. And by 190, that's $305 per day instead. And then instead of $305 and not having to round up by 5 days in the week, this then equals $1,525. And so forth. So you can do the numbers on that, but I'll just leave that as is or remove this here and continue. If like 40K at this amount, see how that drops if possible. These are just examples. It's not set in stone. It says right there. But I've been doing it for so long that I know so well, even without looking at the bank statements from what you've shared with me. And I have a questionnaire form. I might link you to it down below. I may not. It's okay if it isn't. I know without even looking at the bank statements, that's how in tune I am with what I do. I've had people who come to me who have great relationships with. They don't want to work with anybody else because I get them the best and I care about you and them. I actually know and care, like and trust enough. It's not always that you have to ask, can you trust me? I'm usually the one asking, can I trust you? With most people, they'll tell you it's not me who is a problem or that person. It's the client, the unpredictability again, the nature. It could be toxic, the friction and the resistance. And I don't cause that. I don't have that. Like, I'm not that person. I just want to help you get the very best and help you to understand that you have a partner in your corner. Like Rocky Balboa going into the ring, the 8th round, he's getting closer with Apollo. And then you have the trainer, Mickey. Yeah. comes in and he's helping them out. He's giving them directions, the towel, giving them some water. The team is there. And this is what I'd like you to do. Make sure you give him another jab on his left. Go a little bit to the left. You're going to in and lock into the jaw a little bit. And then come in with the right. And then give him the hook. That's what I'm helping you do. And I've had the experience being myself in the ring. So from who better to learn from than somebody who, one, doesn't talk much, two, really gets what you're trying to do, three, gets you and who you are as a person. And I've asked people that. When I give them that, I don't always do this with people. I have my right systems, processes, and automation. We only have so much energy and time in the day, and I have to be calculated in who I give this to and what time do I give this to. In the beginning, you don't always have to get that. Email or in the format you're getting it in different locations works just as efficiently. And I get why this makes sense in some cases, but at what point? If it's even given, if it's even me recommending that I should, I'm calculated in that. Otherwise, I'd be wasting a lot of energy and time. Not always, but I love getting to know who the person is. But logically, too, like I have to make sense of it. And there's only so much energy and time in the day. And I have to understand that. So let's go back into this document. And the only way to know what you actually get, I have to make some revisions here. And I've been just moving some things recently. It's just a soft pull. So to go through an application, just the initial stage, if I said later on like a hard pull because of the contracts, like lenders change things. So expect that. Don't always expect that, but you'll see that as well. So it doesn't hurt your credit at the beginning stages, and it doesn't hurt at least submit an application. Also, it's not about the rates, rather the total payback. And if you can get a longer term, the better. So when you get a term, think about my repayment. See what we saw right now, 1,560, 5,600 plus, 6,500 plus. How do I lower that? Get a better term. Get a lower rate. But the compensating factor that can be more flexible in a lot of this is the term. So by getting the 10-month instead of the 8-month, see how your repayment then drops? Another way to look at it is, like I said, take less if you could. If you get up to, or you could say, hey, or you really knew you needed like 20,000, you're doing 50,000. Customers aren't paying, or my machine went down. You know what you need. So getting 20,000 instead of getting 40,000 or 60,000, which you're going to be paying more than the 60,000, but you only needed 20,000 and your ROI is not as significant. So now your repayment, you're paying like 180 a day. You're paying 1,200 a week, 1,300 more or less, paying 3,000 to 4,000 per month, maybe 2,500. So you got to look at those things and play with the numbers a little bit and understand. And I'm going to be here in your corner. Other people wouldn't tell you that. Why? Or they would, but they just want to squeeze the most amount of this for their commission. I don't do it for myself. I do it for you. And like I said, this is a passion of mine. Seeing the change in you as a person, seeing the change in you as a business owner and those around you, other owners, your employees, the light in their face, and knowing that you help the client or a customer get the service, the product, and how they are demonstrating that and how fulfilling it is and how you just changed somebody's life, somebody in your community, you made a difference on the economy and what you do and how you drive the economy, and you're the force of it. And I've helped out so many people get back up on their feet in many ways, not just funding wise. And I just want to help you out as much as I can. So right here, make sure the benefit of taking the funds exceeds your repayment, and doubling, tripling, quadrupling your ROI monthly, so it helps. Note, if you have a first position, which you may or may not have, and we're not able to get you a higher second position amount because the first position is paid over 50% and even closer to like 80 to 100%, then we may be able to look at paying off your first position and you netting the difference, as I said earlier. Some lenders can pay up to 2 positions before more than that. It becomes complicated and harder to do. Don't over leverage yourself again. Be careful. And if you are already taking out advantages to pay off other positions and all this debt, like above 35% of your revenue goes towards it, more or less, most lenders will shy away giving you more. So a lot of people are justifying and getting more because of the growth. But sometimes when you grow, you don't grow after 3 months. You hit a plateau or Oh, something in your process changed. You lost somebody. Boom. Instead of generating 80,000 a month, now you're generating 60,000, and then you're going back, and to get back on track, maybe it's harder. And if you're already taking out, like, okay, I just mentioned that, just wanted to make sure. Payoff discounts explained, best of the best, and I truly do mean this. So right here, let me put this here in. I'll just probably leave it the same. Let's just leave it at that. Our lenders will never change a prepayment penalty for paying off. Will never charge a prepayment penalty for paying off early. However, prepayment penalties are very different from early payment discounts. So now that you understand that here are the payoff discounts you can get starting with most B and C paper lending clients. So there's a little bit about that. Let's just cover this part though. One, paid off month one, you could get a discount of 12% of your unpaid balance, includes principal and cost of funds. Two, paid off month two. It could be a discount of 10% of the unpaid balance. Sometimes it's more than 12%, sometimes more than 10%. Includes the principal and the cost of the funds. Three, paid off month three. Discount of 8% of the unpaid balance, includes principal and cost of funds. So it's still relatively high, and maybe it's different for you. Prepayment discounts on a paper client. So there's different tiers for each provider. So I see a little bit of light of the sun. You might, yeah. It's weird here in this weather. A, B, C, D, E, F, G. No, I'm not doing that. But there are different lenders like A through E, A through D, or more or less, where if you don't have the best revenue in underwriting, the credit and all this, you're not going to be an A or even a B tier. An A tier lender, you probably heard of them. I'm not going to be here naming them, but I'm in partnership with them too. And you have to be careful of just going to them always directly. For the rates, they will decline, or they will barely give you as much as you needed to. And the file that is getting submitted under them recognizing me rather than you just going alone or going through a different partnership with the team and I. So you have to understand those things. And there's A, B, C, D, and different levels to it, depending on your revenue. And you won't always get the best because of that. So A paper lenders will almost always provide prepayment discounts of a range between 20 to 25% of the total cost of funds. Unlike for the B and C paper lenders having an 8 to 12% prepayment discount off the total amount due, including your principal and the cost of funds, the A paper lender will take the 20 to 25% of the cost of funds and only and not the principal borrowed. So again, the A paper lender will take the 20 to 25% of the cost of funds and only and not the principal that was borrowed. So you have to also understand on how much can a lender take and what remaining cost of funds you still have to satisfy and pay. That's just common anywhere you'll see. So for an example, on a 100K prepayment example, let's say you're getting 100K in business funding right here. And you're given a factor rate of a 1.38, which is an average. I'm not saying you will get that, but 100K, 1.38, if the rates are fluctuated because of your industry, because of your payment history, yeah, it's not always 1.2 or 1.18 or 1.19 to 1.3. It could be 1.19 to about a 1.35 in some cases. Other times it's a little bit higher. But with a higher or lower credit score, that's why you see rates higher, and other things are determined by it. I'll get to it. That's equal to $138,000 you're paying back. So $38,000 cost of funds right there. Simple math and numbers, rounded numbers. The industry standard is half these numbers. However, most of these lender partners provide the rates I'll show you below. Using the 8 to 12% discount scenario, B and C paper lenders, your prepayment discount would end up being $11,040 to $16,560 minus the amount that you already have paid in. So on that daily or on that weekly. If you start daily, hey, later on, if you can move weekly, there's that. Or you continue the payment structure. A lot of people say, hey, I can get a weekly, but I've had people come to me and go, I just want daily. It's much more easier for them to micromanage it, and that's more effective. Using the 20 to 25% discount scenario, your prepayment discount would either be 20% or 25% of the $38K cost of funds, or in other words, $7,600 to $9,500. So that's what I meant by when we spoke about this part up here, the 20 to 25% cost of funds. And down here, we got into this would either be 20 to 25% of the 38K cost of funds or the amount you see there. Does that make sense? It's a very unique way to get accommodated for paying your advance back sooner rather than later. And we even have lenders who do less than 15K. We're going to skip the scenario if it doesn't apply to you, but there's just some more examples like what would it look like on a 1.19 to 1.29 in 30 days, 1.29 to 1.39 in 60 days, 1.49 to 1.69 in 6 months or 4 to 6 months paid. And so here's a little bit more on some of those examples. So 15,000 on a 1.25. Just going to quickly go through these, but 1.29 examples, 1.49. If it were this, you can pause it if you needed to, but one thing I didn't say is bookmark this. Maybe there's somewhere around here that says bookmark it. Come back and watch all of it if you needed to. But I wanted to give you as much as you could get in a video so you're not also questioning this stuff and understanding that this is the best process for you. And I'll go in through some other options if they make sense now or in the future. So you see all this. No prepayment penalties. Again, just an example. We already went through this. Plus, if you feel the total payback, what I've said again before, it's about building a relationship with the lenders, the underwriters, myself, everybody, and proving you can make the payments. And then when we get you more funds later, drop the rates, increase the terms, and so forth. Right now is to build the time to build your relationship with the lender because of the market and the conditions. No, I had a lady not too long ago, and I've had many people. She's not the only one. Who was accepted for 600,000, others for 800,000, 1.2. I'm working on some for 2.2 million, some for about 15,000, 20,000. And so 600,000 doing 300,000 up and above, but started with 150,000. Why? When she could have got more, she could have got like 600,000 approved for because of everything, her cash flow, everything looked good, credit, because she didn't need that much, or she didn't want to supply the documentation that she had to. So at 150,000, usually anything over 100 or 150,000, you're asked to supplement with tax returns, a couple. Maybe one is already asked for, but usually you'll be asked for one or two with maybe a year-to-date profit and loss and some more information. If you don't want to provide that, hey, you want to start off with the minimum so you don't have to supply more, there's that. Come back and get more. Such as a recent tax return and year-to-date financials. So you can do the same if you don't want to take extra time to receive your total of funds. It can take a couple more days to another week or so to get anything over 150K. Sometimes it's just faster, usually because we need a little bit more documentation. But if you don't need all the funds at once and you'd like to start off with about 150K and then come back and get more, this is what I strongly recommend doing. It's all about building the relationship with the lender, myself again, etc. If you started with 150K and came back later, then we'll need about the months of bank statements again to then reapply for that. Or if it's sooner enough to give you add-on funds, there's a little bit of that, depending on the amount of bank statements too. Here's an example at 150K at 18 months with a 1.23 rate. So getting past 18 months isn't always easy the first time. I have had people go through and start off at a 20 month, but usually it's 18 months. To get 24 months, like you got to really have a high revenue profiting cash flowing business to really even them giving you 24 months to no experience, starting off with 24 months, but you can grow into that. And so here, 1.23 rate, daily, she was having to pay 513, but it was coming out on a weekly of 2,565. Sometimes there's a bi-weekly and monthly advanced lender, but those are very rare. Don't expect that. Don't expect that. You got to have a lot more with credit, cash flow, non-sufficient funds, less. The industry is quite a bit, and it's very seldom that even happens. So monthly was 10,260, but with 150K she was taking, she was going to be able to do a lot more with it, with things with concrete, with stones, with lands. There's a lot land with a lot of other stuff that taking that 150,000 to make even more than what she'll be paying back, it makes absolute sense. So, or you can add the line of credit option I'll share with you below and combine the two. And in one application, we can look at both. Likely the application link will be down below in the description or in the button, whatever you see. So you can go over there. And when you go through the app sequence, you can select both for line of credit and advance, or just an advance, or either or if there's another option. But sometimes you won't qualify for the line of credit, and I'll get into that here soon, like I've said a little bit before. So here's that. Or you get offered a lower amount, keep the term, the rate and the term the same. This way you have a lower repayment. Plus, if it's not just one offer you receive, then there could be a readjustment if necessary. Here are more of these rates in the underwriting process. Current market conditions are not set in stone due to market conditions, your file and more, but you're seeing the most up-to-date below in this year and continuing forward. These are the most best and most flexible. So a 1.18 to a 1.29 is usually considered A paper lending clients. Normally a FICO score of 720 and above, sometimes 700, but right here a 720 score is what would be best and most recommended to do. Let me see if I can move something here on this side. Give me 1 second. Okay. I'll just leave it as it is. So right here, you see that, and then and been in business for 24 months, 2+ years, in other words, is what you can expect as a payback rate. A 1.30 to a 1.39 equals B paper, lending client, 620 FICO to 719 FICO score needed, usually. 1.4 to a 1.45 equals C paper, and that's 551 to 619 FICO. 1.49 to 1.69, although we just try to go up to 1.55, that's a D paper, lending client, 500 to 550 FICO or 450 plus. When it gets past 1.55 into 1.69, that's because you've been turned down everywhere. You've just been applying too much. You're too much of a high risk. 1.31 to 1.49 and 1.55 equals B to CD, the D paper, lending clients, as you saw above. B paper in total is a client with revenue above 20K monthly, but 25K plus is really it. Good FICO, 625, but we're willing to look at 620, sometimes 600 plus, and been in business 12 plus months, 1+ year. C paper is a client with 525 plus FICO credit scores or 551 plus, I'd recommend, or 550. D paper is a client with 525 FICO or 500 plus in the market, as seen above, and things can change. You probably see things differently over time, but there's that. The rates you get vary depending on your FICO, time in business, other credit issues as past bankruptcies, if any, or a number of delinquencies, or both, and what's shown up on public records and a lot of other stuff. Lender partners take into consideration the time in business and monthly revenue dips when determining your rate. Other issues that may impact the rate are you getting a number of current funding positions, number of non-sufficient funds, number of negative banking days, number of inquiries on credit from other lenders, daily balances, along with a few other factors. Almost most recently, the state of the economy in the market, like you may get less funding with lesser terms, and that's what we're seeing all across the industries. Terms, they are usually dependent on business type, your revenue credit. I'm not going to spend much time going on each sub-segment of this because of time, but I could say so much that I haven't, why they are determined that way and what determines this and what kind of saw some examples earlier, but that's what determines it. A and B paper, weekly, daily repayment. If you are an A and B paper, you get weekly or daily, 12 to 24 months. You must have 50K plus in monthly revenue, 675 plus FICO credit score, although in other industries it varies, so it could be 700, 720 more or less. 1 year plus in business, C paper, still weekly or daily repayment, 7 to an 11-month term. You must have 25K in monthly revenue, 600 plus FICO, sometimes 620, 6+ months time in business, sometimes even more depending on the industry. D paper, daily payments, 4 to 6 months. You must have 15K plus in monthly revenue, 500 plus FICO credit score or 450, 4+ months time in business. So when you're questioning why you're getting what you're getting, there it is, too high of a risk. And then anything underneath 15K, normally you'll see 4 to 6 months, 3 to 6 months, or maybe 10 weeks, you could say. So 2 to 3 months, more or less. So you can see why you'd be getting what you're getting, right? So I'm going to quickly go through this. Examples shown above, not set in stone. You'll still have to go through this to see, and then your balances, a lot of stuff that determines this. No prepayment penalties. Daily, sometimes weekly, as I mentioned. Automatic micro payments, so you don't have to go in there and do it yourself. Monthly causes too many defaults in this industry, and even bi-weekly, even weekly, you'll see more than daily, honestly. In good standing with making your payments on time and so forth, you may be able to go weekly. And having a lump sum at the end of the month, no. Someone to trust you to, no. You may do it, but it's like, and you could do it, but no, that's too much of a lump sum with everything else you may already have going on. Also have bi-weekly and monthly product where it goes up to 36 months that I can show you, but it really won't work. That just doesn't commonly happen. Don't expect that. But if you don't, here's more. Show that you can pay the amount back. These are best so you don't go into a default and never be able to get funding online here or anywhere else. Literally, a lot of people default on monthly payments, believe it or not, usually because they don't have enough cash flow and may be paying credit card fees that are more than their rent and more. And this way, you don't have a huge amount at the end of the month that may fluctuate and be overly too much, and you end up paying for a longer time with the added interest. You wouldn't want unsecured business term loans in some cases because of that. Secured term loans in some cases, and possibly the SBA if that happens. And it's not always like you need a longer term too. Plus, we'll never give you something you can't handle. So I just don't want you paying on added interest just because you feel like a longer term with monthly payments is better. It's not always best, absolutely necessary. And I spoke about this. I think I put it right here. So this is what I did on a Facebook post once. So you want a monthly repayment on an alternative business loan, but you didn't know this or forgot about it. And I just made a post here. And monthly repayments are not always best. So I spoke about having to change your vision about it, having to start somewhere and work your way up. You can't just get everything you want without either giving up collateral, increasing your revenue and or credit. You can't keep thinking you're entitled and 100% deserving. And that just happens sometimes. I'm not saying you specifically, but it's out there. Because you have a lot of time in your business or businesses, or because you have stronger credit or revenue, but you don't get how this works. So it could be an educational issue. You need a strategic way of moving up levels and the right roadmap. And there's quite a bit here. And yes, you do see where it's on your personal credit. Like they have to look at it. It's not EIN only. EIN only credit cards are hard to get. Corporate credit cards. Go to Brex, go to Divvy, I'm not going to start naming them all. But go to these different companies that see if they give you it. They're going to base it off how much cash flow you have over a specific period. How much do you have in your accounts reserve? How much liquid, credit, other compensating factors, asset factors, equivalent to what you could get. It's not collateralized, but it's hard. And those are not just expected. So they have to account for who you are as a person. And you're the entity first and then the business. So making sure you can make the payments based on your credit and personally guaranteeing it, there's nothing wrong. Just be accountable and responsible for it. If you haven't been in the past, you have a problem for it, that explains a lot. Or something happened that wasn't your reason, or you just don't want it for other things you're trying to get approved for. Like, organize. What do you need to prioritize? There's nothing wrong with the personal guarantee. I've done a lot of that myself. Just be accountable and responsible. And that's usually it. And here, and you probably are accountable and responsible by your credit. Like I get that, but there's that I have to just make sure you understand. That's why I'm mentioning it. So some of the many benefits of this is that they don't normally report to the credit bureaus, and even business credit, which is not bad. Like I mentioned earlier, you can build business credit in other ways that can help you if you haven't or you need more. No collateral involved, no hard credit checks are at the beginning, or it could be throughout, and you're seeing changes to where it's hard credit checks, contract approval, offer agreements, all that, contract sign. I only have a personal guarantee. Just about 99% when loans at advances come with a personal guarantee. And that's just the expectation. And they can file, the lender dependent on filing a UCC lien, that's fine. If you have assets, you have different businesses, they may have to take all under consideration. So just understand that that's common. That's okay. Documents needed, 3 months of bank statements, 4 months of California, potentially Utah. There's other ones out there, New York or so. Well, they can ask for more, 4 months. There's a lot of changes going on. So when you see this, it can be more or less in other states. So it could be asked for in the sequence, or I can ask for it up front. But if it's like California and states like that, I tend not to ask for your bank statements because of a lot of disclosure laws. And for the type of service, it depends too. But there's other ways to submit this that I'll show you. And I've a lot of the times collected them through email, organized them on Drive. I analyze them, I evaluate them. Other times I don't see them on the front end, but they're done on the back end for review. And so there's another way to submit it through, but here I go into a little bit of that, how you can submit it with the digital app. Everything is fintech. You see a lot digital application. Not a lot of it is hard PDF unless you needed to submit it that way, but a lot of it is digital online. You can easily submit it. Adobe, edit, PDF, fill and edit, whatever you have to do, or online right there, you just fill it out and then upload your documents. It's very safe and secure into the portal. Everything will be done there. Unless the 4th month is asked for on the app sequence, unless it's not updated, or if it's already updated from the time, then ignore it. Avoid a check and a copy of your driver's license. Now, one thing that people always ask me about is, what if I don't have a voided check? Can I subcheck? Can I submit anything else? And the answer to that is yes. So I've had people many times who come to me and will continue where they don't have a voided check or checks. That's the one thing that I recommend having. Always have it on hand where it says voided or void, and it has your information. So I understand this is the business, like, okay, name, everything. Everything is done electronically. That might be what you do. and you're asking what's another form of document, or you just don't have it, or you just do something different in your operations of your business. So ask for a voided check. If you don't have one, you will need a bank letter stating that your account is in good, not bad, good standing, and that you are the owner of the account. This letter, it needs to reference your account number in the letter and be signed by the bank representative. Or you can send a copy of your direct deposit form. I just collected one from a client the other day. Sometimes that's acceptable, other times it isn't. Depends on the provider, depends on the organization. So even if you submitted that, it's worth checking. A lot of the times it will be acceptable. Again, you will need a bank letter stating that your account is in good standing and that you are the owner of the account. Your letter needs to reference your account number to verify the account number in the letter and be signed by the bank representative, or you can send a copy of your direct deposit form. Pause it if you needed to, rewind it, listen to this again so you understand what you can submit. So let's continue to go through this, but copy of your driver's license, front and back usually is required. Sometimes just the front end is acceptable. Note, another thing too is if you won't qualify because you're not a permanent, like that's just obvious, but let me state it. Permanent resident, like I-10, that normally wouldn't work. You have to be a legal resident. And what if something happens where deportation or anything bad happens? Don't want that to go through, or I don't wish that upon anybody. But that's protecting ourselves, the lender, like, oh, can't make the payment, or fraudulent activity, move money to another account to a different country. Nope. And that's what a lot of people end up doing. I've had a lot of people in fraud. Oh, I didn't know this, or deceiving individuals, bad people. Well, yeah, I don't want to say it's always that bad people, but at that point, like, come on. No, you will be able to safely and securely upload your documents needed online with the streamlined and hassle-free application process and get them on the back end. They'll be there on the back end to review. So make sure you have them all together before for a faster process. Otherwise, you can save and continue later in the process. Try to have it all together the first time so we can move forward faster. I might have a video down below, or you go through individual rates video first, and after that, you'll probably see something else, and then the walkthrough of the application. But it's okay if we don't get to that. But it's very easy. You just go through it, and you'll be asked to submit a few questions, answer a few. What's your credit range, or what's your score? What's your revenue range? Here's if this is this. Okay, this is the organization. This is the one that you'll go through. It's a lot of it streamlined, which is much more energy and time efficient. And we can move forward faster and try to get you an offer faster and to getting your funding in less time. Second option, you can always email me your documents, ask for up above via email here, and I'll organize it in my Google Drive or anywhere else before sending it over to the provider. But it depends. Like sometimes I may have this for your file or not, and depends on the state. But I've asked for them a lot of times, and I have so many. Other times I'll say, here, just go through this process. It'll be on the back end for review. So all of it is there to see. And so I'll say, hey, please skip this based upon your state or this because of new disclosure laws. And it just applies to everybody. Being compliant, all this other stuff. It's best, and I do things by the books, just so you know, I don't take shortcuts. It's best to be submitted through the back end and safely and securely into the digital app sequence to see if they're on the back end due to your state and new disclosure laws where I, as a broker, can't always directly collect them for specific services. So make sure to send them through in the safe and secure app process so it's there that it's seen on the back end. Application, I'm not going to go through all this here, but here when you do this, there will be a button. You can go through the partnership. You'll click on the navigation tab if you go to the homepage, and then click on the green business capital or the business capital tab. There's an instant microfunding, or you'll go directly to this tab, or you'll go directly to one tab, and then click on the green apply now button unless that name has changed or it's positioned differently to get started through my partnership that I have with DAC and the Bank Breezy partnership there, that they work amongst each other, and they're a great partnership. Or if it's somewhere else you're seeing this, okay. But in the application process, you can select the advance for that specific funding that will be evaluated for. You can try to select for both unless they don't apply to you to be seen for both. in one application, or even if you didn't, sometimes we see both, and they'll see both. For the advanced and line of credit, but with lower credit and more industry and more, the line of credit likely won't work. So the advanced is the way to go. To get started with the application, go here. And then I just showed you the statements right there, depending on the states. And if there's other states too, which there are, how you'll be able to upload them. And the option again, what I mentioned, that was kind of redundant. I was moving some things earlier. So just some extra supplemental stuff. Self-employed stuff, and we're going to try to close up here soon. I know I said we'd be done sooner, but I want to give you everything that you need to know when it comes to this. Self-employed, 1099 gig worker, contractor funding, best option, and you can use a personal account for business. If you're using a personal account for business, and this is your option. New, relatively new for self-employed, 1099 gig workers, independent contractors, Uber, Lyft, grocery shopping, etc. Here up to 10,000. So if lower revenue ranges, or if you've defaulted, they'll take defaults normally. Here are more details. Same day funding up to 10K. Approval amounts equals 25 to 75% of your monthly revenue. Are the approvals? Rule of thumb, example, 14,000, advanced 10,000. Of course, it can be lower depending on the situation. Average pricing, 1.39x your dollar amount. It can be as low as 1.29 or 1.19, and as high as, or 1.29, excuse me, as high as 1.69. But we see 1.5 at most when the revenue is better. Example, you get 1,000, you pay back 1,390. Example number 2, you receive 10,000, you pay back 13,900 on a 1.39 rate. So if you're barely doing like 3,000, you might only get between 25 to 40%. 5,000, maybe 25 to 50%. If even you're doing 5,000 or more, closer to 7,500 and above, you're getting closer to the 40 to 60%, 40, almost closer to 75%. But it just depends on other factors. So do more, try to get more. Example 2, went through that. Repayment discounts are available if you pay back early, automatic weekly payments only, unlike the other option in providers where they will do weekly or daily. No monthly options with any funders, so 3 to 6 month terms. Renewals are usually 16 weeks, which is 4 months, more so for clients at the 3K plus minimum revenue level. Personal checking account, you can be using that for business. You can also have a business checking account. Online banking is set up, no FICO score check. This is the lender that won't look at that. But California and New York, as you see on your screen here, usually get denied per laws and can't fund there with this service right now, so it won't work for these states. So if you happen to be going through the process and you are in those states, you have to take a minimum of 5K plus on your lowest monthly revenue is what you should be doing in the last 4 months to qualify, and you'll get bumped up to the higher service, and there will be credit score checks for that. Bank linking with Plaid, it's very reputable. I've done a review on them, and very reputable company, and a lot of other companies use. Make sure to have your credentials ready. Some banks haven't teamed up with Plaid and doesn't work. No, about 5% of banks or so in America don't link with Plaid, so you may be declined if your bank doesn't link. So there's that association with it too, just so you know, and it's more of an automated process, very safe and secure linking. And if you can't link with Plaid, check with your banking institution, or you might have to sign up with Plaid directly, and I've seen that work in cases. Qualifications, 3,000 monthly revenue, sales, and 3K plus on your lowest month in the last 90 days. 4+ months time in business, minimal non-sufficient funds / negative days, no more than 5 NSFs / negative days in any of the last 3 months in any. So current loan consideration, if you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. 4+ deposits is always best per month, but we are willing to see 3, 2, even sometimes 1, more or less depends on the business, the nature, and the frequency. How it works, I don't want to go through all this again, but similar to what we saw earlier, 25 to 75%, I gave you an example there. So if you do not want what you are getting, there's quite a bit there. And softball in the beginning and all that. To start, daily, weekly, because these are on weekly. So 1,500 at a 1.45 rate in 3 months, that's a weekly of a 180. The more, usually it's going to be a little bit higher than that. But overall total cost of financing, see that there, some numbers. You can pause it and come back to it if you need to, or might leave the document. Or 1,500 in 5 months. Don't always expect that. That just doesn't happen with that kind of amount you're getting in revenue. But just some examples here that you can check out. Not set in stone. And another thing too that I want to draw your attention towards, and I have something else that I can share. So let me make sure. I have it in a different document, but I wanted to go through the Canada funding. And I know that a lot of people are from there, And they're asking, and I've always had that asked, like, oh, what about Canadian clients? Can I get funding if I'm in Canada? And so the short answer to that is yes. The long-term answer to it is like no, because not a lot of lenders will want to work with that because of banking, like Puerto Rico and some divisions of Puerto Rico. So you have to also understand like what's considered U.S., what it like. There's a lot of other stuff you have to look at, and then the banking system, the type of bank they're set up with, and anything like fraudulent and having miscalculations can be a big issue. So I just wanted to address that part for you. But stuff for Canada, like what I'm looking at, and I have something open here that I want to go through with you, but let me move this. So with Canada, usually we're looking at sales over 10,000 a month, and not a personal, but a business checking account. And this can go up to 500,000. And then the approval amount for this, usually it's like what we saw earlier, the rule of thumb, 1 to 2x, maybe 75 to 200%. But 1 to 2x the amount of your monthly revenue, lowest monthly revenue, average monthly revenue is what's being looked at. And instead of a 1.18 to about a 1.49, this is a 1.27 to a 1.49x advanced amount. So it depends on your credit score too. So the example here, if you received 60,000, you're paying back 76,200 and 89,400. These are 3 to 12 month terms, so not like the one we're looking at now where it's 3 to 6. These are 3 to 12, but not 4 to 24 months like the ones before or the one before. 3 to 6 month terms for smaller funding, and it's 6 to 12 month terms for a larger amount of funding. Automatic payments, and most have automatic daily payments Monday through Friday. Excuse me. They are not on holidays. Some have weekly repayments like some of the other options we've seen. No monthly payment options with any funders. And just having a business checking account, like I said, is what you want to have. Must be in the name of your business, not a personal account that you're using for your business. Your online banking, like we've said before, have that set up. Minimum of 5+ revenue deposits per month. So this is where it goes a little bit higher now. With lower revenue or in a different international or wherever you're located, the depositing has to be up. Sometimes less we can look at, but minimum to 5 deposits plus per month. Have 6+ months in business, so it's lower. 100,000 or 10,000 plus in monthly sales, like I've said. You have to have a 550 plus FICO credit score. So not always is it 450, but 550. And there's different credit score requirements between the U.S. and Canada. But even when we try to do like credit card processing or try to do business credit cards, try to match the two for both. Minimum 2+ employees is what we're looking at, and the lender is. A current loan consideration, if you have a current capital advance, the amount you still owe can be taken into consideration and cause a reduction in your approval amount. And then there's more funds with 2nd to 5th position, sometimes 2nd to 4th in other ones, or only 1 to 2. But this one, 2nd to 5th positions may be available. It's a very straightforward application like the other one. So you complete and sign your application. You're going to upload your bank statements, driver's license, voided check, you sign, and your point of contact there that will be reviewed, and everything in the package to determine your funding and the type of provider, everything in the team in the back end, and getting the best offer. If you accept, the contracts then are requested from the provider, and things that we're doing all as well in the back end and things that I'm in communication of. And then contracts, then if you sign, you're going to be the one that signs them. Final underwriting steps then occur. And then example, it can be a funding call, decision logic, et cetera. When you're a higher tier lender in the US too, like a funding call isn't always required. It's just like quickly wired into the account. And so decision logic check, it could be there, but funds then are sent to you, and that's where it goes from there. So it could be very quickly. And now let me go back into this document so I can start sharing with you even more. So business line of credit, option 1, via fintech lender. You can even combine this with a lump sum like I showed you before. A lot of these lenders want at least like 10,000 in an account, more lenient because of banks. So maybe 2,500 to 5,000. Sometimes that's taking off and they don't need to, but cash flow is huge for like the last 6 months. Not always the requirement, but something that they look at. And more like time in business, but this isn't usually the case with fintech providers. So it's normally fine if you don't have that. You see that a lot with like bank term loans and bank lines of credit. what do you think about getting approved between 6,000 to 100,000 and using the funds when you want, as well as getting approved between 50 to 150% of your average monthly sales, more so between 40 to 60% or so. So yes, there's usually a less of an approval with unsecured lines of credit than there are secured lines of credit if you have that. But you have to understand where you are positioned in the market. And so let me move this. Oops, sorry, I had something in my way. But 6,000 to 100,000, could it go up to 250? Sure. But do most people start? No, they don't. That's not realistic. And using the funds when you want, as well as getting approved between 50 to 150% or 40 to 60, as some do that. And the partnerships that I have. So you can use the funds however you like and use as much as you want. This is a perfect way to utilize for all types of funding. But in a lump sum, you could get more than 40 to 60%. And even if it was 50 to 100%, like, you have to look at the cost trade-off and also look at the opportunity of how much funding did you really need. Details, terms equals 12 to 18 to 24 months. Payment type equals weekly or monthly. We'll decide if you get weekly or monthly, if you are in the sweet spot or not. The sweet spot details will be shown below in the requirement section. Monthly fee equals $20 if so. Easy to understand draw fees, balance fees when drawing funds or maintaining balance owed. No prepayment penalties, plus big savings with early payoff. No collateral is then required. You can lower your weekly, monthly payments by drawing out more funds. Longer terms can keep your payments down. Balance fee is anywhere around 1% per week of your balance. So for every week you have it open, you're charged a 1% flat fee on the remaining balance. And it can be as low as 0.69%, and it can be as high as 1.39% per week. Withdrawal fees can be anywhere from 0 to 3% plus, depending on your file. If you are in it for the long term and want some small monthly fees instead, and so forth, if possible. So 0.69% to 1.39% interest cost of funds, in other words. For example, let's say you get approved 20,000 and withdraw the minimum of 1,000 with the 3% draw fee, which is 1,030, and divided by 12, 18, or 24-month terms, depends on what you get. So we divided that by the 1,330 into the weeks within the months. So let's say you get 12 months, which is 52 weeks, and that's $19 plus the cost of capital, which is the interest again. It's another way of saying it. If 0.96% weekly cost, because you're assessed at a little bit of a higher risk, then you'll pay $115 per week for one draw. Okay. I got these numbers from taking the principal of $1,000 with your draw of 3% you owe, which is of the $1,330 on your balance, and divided that by 52 weeks. Because you got 12 months, since we did 52 weeks in that, and then figured out your interest cost of capital to be 0.96, which was given to you. So $1,030 divided by the 52 weeks equals $19 plus then that 0.96% that was given to you, assessed on your risk, credit, and more, multiplied by 100 to turn it into a round factor, to a round number, which is then 19 plus $96. That's $115 per week. You'll be paying until you fully used up your principal of $1,000. So $115 per week is occurring on the remittance schedule and the drawdown as you continue to pay this down. I hope that makes sense. It can sound a bit confusing, but it's very straightforward. It's an amortization thing, which is jargon for your weekly repayments and how they are calculated. An example for 10,000 right here, minimum withdrawal fee, 0.75% interest for 12 months, 52 weeks at 3% draw fee, 3% is common. Then 10,300 divided by 52, all this you see here, $273 per week. So you can pause this. I'm going to go through this quickly, but if 18 months, I give you an example there. If 24 months, oops. So you see that plus or minus, there's just some details there. So preferred line of credit requirements. Let's go through this as quickly as possible. And credit limits are between 6,000 to 100,000, could go up more or less. Getting above 100K uncollateralized for anyone is very difficult in the market, and likely when you're watching this will still be, even if it's lessened. It's hard. A lot of people are getting their line of credit taken away, and banks aren't lending as much. They have their cap rate, and they have how much in the requirements that they want to give somebody. If they don't meet like millions that they can get, or they're generating millions, at least it's hard. And there's a lot of other details that I'm not going to get into, like what's going on with the banks and all this other stuff. but it is hard out there right now for just about every single person, even if you can qualify for a bank. And they don't always understand your use of funds. They'll restrict you. They'll not get what you're trying to do. You've exceeded things. Maybe you don't have a relationship anymore. There's so much. So as we saw there, even higher tier revenue clients are losing. I've seen people lose like 250,000, 100,000 in their line of credit for not using it in the first year, or it's been a year since they haven't, or 6 months. Even now it's become like 3 months in some banks. Have a minimum of $200K in annual gross revenue. So not asking for the world, but $200K. Have 1 year time in business. The sweet spot though, for you, the merchant, is $250K in annual gross revenue. So $250K plus is ideally what is being looked at. 2+ years time in business, 675 plus FICO Experian credit score, and it can be as low as 625, but it's not that simple. Being in the sweet spot doesn't guarantee a monthly line of credit. It improves your chances and approvals, depends on a number of numerous account of factors such as possible disqualifications, high debt to income ratio, history of late payments, too many inquiries, credit utilization ratio too high. You have an existing line of credit, although not only does it just decline you, but we have to see what you have. You could sometimes get bank and fintech or a couple. Credit report issues that need credit repair, recent bankruptcies charged off accounts. There's so much more that is looked at to determine this. Restricted industries list. So higher risk industries are not eligible usually for this product and product feature, which are like construction. It's hard. Maybe things change, but you'd have to be generating like 100,000 a month consistently, right? Deposits. Even then, it's hard to get a line of credit. But construction, all construction classes usually. Transportation and warehousing, hard. All trucking / transportation. I just feel like transportation, excuse me. Wholesale trade, import / export. Accommodation, food services includes restaurants, real estate rental and leasing, all real estate, mining, oil and gas, administrative support, waste management, remediation services. So there's also others out there, and it just depends, but maybe things change, but it's normally that. Best for retail, healthcare, marinas, repair shops, e-commerce, metal fabrication shops, and more. Note 1, if you'd like to get a line of credit, we can also evaluate you for an advanced term loan / term loan, so you can get both, giving you more funds, or you can take one if possible. Note the line of credit what it normally approves for. So if you're expecting more from a lump sum, there's that. Pause it here if you need to. The amount of documents similar to what we've seen before, and the process of submitting that. Discounted line of credit, or more or less there, but there have been revisions and changes to a lot of this. So I'm just quickly going to go through this and the differences there. And what they were asking for, like 15,000 in monthly revenue. A lot of the times, though, with lines of credit, even the one we saw before, they want 40 to 50K in monthly revenue. So it's not always the 200,000, but 40 to 50,000 in monthly revenue per month in the market is usually what is asked for. And you'll see that commonly, maybe a year, but 40 to 50K plus, 550 plus owner's FICO credit score. Usually won't cut it though. Like 700 plus is really it in the market a lot of the times. 660, but 700 plus, 720 plus is best. And more time in business, usually 1, not always, but 2. 2 is really the number plus. The more you have, the better. Possible disqualifications, and I just mentioned that earlier. So there's that. Now let me switch over to a quick other document, and then we're going to try to close up here as quickly as possible. But here, let me put this in the screen. And let me find the part that I wanted to bring up. So there are bank term loans, or let me go to the line of credit first. Okay, so I'm going to do it like this. Let's go to this one. So what I'm showing you is a bank term loan, somewhat of a similar process to a bank line of credit. There are those, though, that for a bank line of credit, sometimes 660, but they're going to do a FICO SPSS business liquid credit score. So business credit is an emphasis with this of 145, 155 and above, sometimes less, but if you don't have everything to meet there, it's going to be hard. But like with bank term loans, these are amazing because if I scroll up here, you may see up to 350,000 with 2, 3, or 5 year repayment terms of your choice, if congruent to the years you have. So like 5 year term, 2 year terms, usually stuff like that. But down here, there's one option. Rates can be anywhere between 8.5 to 15.99% APR, more or less, as the market fluctuates and changes, and the approval rates exceed 70%. This low-cost bank financing option will allow your business to grow and thrive. Just imagine what lower-cost financing would do for your business. No upfront fees, lower interest, fixed monthly payments. Funds can be in like 10 to 15 days. One-time success fee after closing on a sliding scale, starting 6% for the lowest level and caps out at 2.5% or so. Requirements, though, if you don't meet these, well, we went over earlier with the advance, even if the line of credit wouldn't work, but we can try to combine the other two. That's what you want to do. And even if you don't want to take the time to submit the documents and all that, but 650 FICO minimum on all three, sometimes 620 with other considerable factors, cash flow, but FICO 2 years minimum time in business, 250K in minimum annual revenues for the last 2 years, not just one recent year. I have other bank term loan lenders who may look at just a recent one, but 2 years is best to get the quality in this. Industries acceptable are all except cannabis-related businesses. Eligible in states are all 50. Many times what they would require, so I'm not going to go through all this, but you see it on screen just quickly. Terms, important notes. You can pause this. I'm not going to go through every one of these things, but any owner with at least 20% or greater ownership stake will need to pull their own free credit report. So if you have multiple owners, there's that. And looking at the better credit score and the majority owners, a lot of other stuff to look at. Experian free credit report, you can pause this. But I'm going to just quickly go through this and what the decision time is, or you can pause it when you have time. No collateral to pledge. And usually this means that you're not required, but many banks will still place a UCC lien on general assets of your business. And this will do two things. It establishes the bank as a lien holder for legal purposes, and two, alerts other future lenders they have an outstanding debt, which can serve to help you to avoid getting over leveraged in the future. How to apply? This is a different process I'll ask for and what you submit. So all that is in there. See how there's more paperwork that you would need to submit, though. And from all the different owners, if there's more, and what more I would ask for. SBA 7A option, there's more of them. I'm just leaving you one here, or just some generalities. And what I would ask for, do you have equitable collateral? If so, what and how much? Do you have liquidity and post-closing liquidity? If so, how much? How much of a down payment can you provide? This goes in part with equity injection in question 2 above. What relevant experience do you have, if any, or similar? So quite a bit there if you wanted to pause. But today I wanted to focus on the fast advance funding and getting into that. And I might have this somewhere else. But here you see this in the different processes. Different examples, what would be required, depending on the date you're watching this, and stuff that I need to update too with those types of documents for this doc. SBA Express, and then in other places to do that, different, the Bolt loan, it's another one. There's more options too, just updated a few things. Bolt loan, and without collateral, fund in 7 days, 25,000 to 150,000, terms up to 10 years with rates of 3.75% plus. Or plus 3.75%. So prime rates plus 3.75%. Who have good and personal and business credit scores. You see the FICO SPSS right there needed. And it's not all based on cash flow or profitability like the other SBA loans are. So what it can be used for, working capital only, requirements, documents needed. Another business line of credit. This is the one that was somewhat discounted, or not the one that would be used as frequently. Equipment financing. You can also use revenue-backed and use that towards equipment too if you needed to. So there's quite a bit there. Some things that have been removed since then and so forth. Asset-backed lending options if you wanted to go down that route. There's account receivable financing, which I'll try to get into here in a little bit, but secured line of credit. Quickly go through that. Account receivable financing, AR line of credit, as I mentioned. 6+ months time in business. A lot of the times it's 1 year required, 40,000 in monthly receivables and or 100,000 in open receivables on 30, 60-day terms. More so 500K though, over 30, 60, 90 days is what a lot of them look for. 250K, depends on the industry too. 1 million in annual sales though is a requirement. No minimum credit score. But usually in a 1 million, that's for like inventory for the most part. But yeah, if you meet the eligible receivables, but ideally 1 million in annual sales is a great point. No minimum credit score. It's collateral backed. Credit is less of an emphasis. It's more of an emphasis on the people who are paying you. Benefits: sell one or several invoices, get funded immediately. manage cash flow gaps, revolving line of credit, facility size. And these can be in different locations if they're not where you're going to be going, but they don't make sense now. They can make sense later, or if it doesn't, there's that. Time it takes, a little bit more details, inventory financing line of credit, 1 million in annual sales, 1 million in current inventory, 1 year time of business, no minimum FICO, commercial real estate and developable land. I'm not going to go through all this right now, but you can see it, pause if you needed to. Maybe things change and it's not always as available. It's also cash out refinances, like I mentioned here. And there's a little bit I got to update here, but it's all there for the most part. And you can use it for commercial vehicle equipment that's within 1 to 2 years, 2 to 3 years sometimes. And it's 100,000 in value, not combined, but one piece. So it's up to date and current. And or for property, commercial real estate, or any kind of investment real estate that you own, fix and flips, rental, things that we can inject equity out of and do a cash out refinance for. There's a lot of stuff that I've done there too. So now we get into the credit back solutions as we're speeding through this. So this is a great one. I'll try to leave more information down below, but you need to have better credit. This will require you to have 670 on all 3 consumer credit bureaus. Is only acceptable for personal and fast track funding, meaning that we're trying to help you organically increase your threshold on your personal credit before you get business credit ready. But having a 680 FICO credit score and scores, usually on all 3, sometimes I have a lender who does 1 on a different place, but 700 plus is the requirement. And that would be for like an entry of a personal loan if you even qualify for it. Sometimes personal lines of credit, but not always that. So you see that here. So I do 0% interest credit card stacking, where I can add multiple business credit cards strategically at 0% interest, depending on the bank, depending on what you have, what you don't have. But they would request you to have 700 plus on all 3 consumer credit bureaus. So I know most people don't have that. If you do, this is an alternative with 0%. If you wanted to add that to the revenue backed or the line of credit, if you could qualify, and other options, there's that available. And no more than 4 bank inquiries per bureau in the last 12 months. And there's quite a bit of information here. So just you can pause it here, but you can see utilization would be required. If you don't meet these things and don't want to go through credit, I don't recommend it. Go through the revenue backed. And for the amount you'll get and for the leverage you'll have, if you're not going to leverage 0% correctly and not enough ROI, it doesn't make sense to do that. So here, personal funding for like a personal loan. And what would be required for the business financing, stated income, interest rates, timing, 3 to 5 weeks. It takes more time. Success fee, very reasonable. And then program filters that I put here for you. And the examples, how to get started. And then credit partner if you need one. So if you don't have the credit eligibility and you have a credit partner and an owner, we can look at their credit if they have better and they want to go through creative credit back funding and do multiple personal and business combo if they needed to, or just one or the other if you could qualify. So we can combine them if you would like, and using their credit so that they can guarantee the credit. And then business rollover, credit restoration, and high debt elimination. So there's quite a bit here. Personal term loans for funding, low documentation, what would need to be supplied, unlike the other one, which is really no doc. And just more information on how to get started. Here, program filters, credit partner review. There's also the 401k rollover for the working capital program if you needed that. So here it is quickly. And there's another option, but that's if you have lesser credit and even if it works in the process to that here. Okay, so let me see. That's similar to what I showed you before. Different options like angel investors, SBA microloans, peer-to-peer lending, maybe friends and family grant opportunities, equity crowdfunding options, venture capitalists, angel investors, hedge funds. There's a lot of stuff. Fixing and increasing your credit. I have that too. Credit repair if you need all that. Building your business credit through trade accounts through business credit and vendors, suppliers, and also lines of credit. And business credit cards, I have a lot of material on. Home equity lines of credit, home equity loans, 401k stuff, even more. Ground up construction, I have that as well. New construction, anything land related, employee retention credit, and just in conclusion, what to do, how there are many services and what you should look at. So Now, let me bring this back into focus. I know we spent a good amount of time on here. Perhaps you've bookmarked and come back and watched it later or at one time. But there are no shortage of options, as you've seen. Oh, and I actually have one more really quickly. I just saw it on my tab. So here, let me open this up. But I drew some examples from this where, hey, if it's this to this, end of month offers, get feedback, be open-minded, and be patient, please. I just want to make sure I put it like this in a very nice way. I don't mean that aggressively. I'm never aggressive. But here, I just give you some examples on how I review a file too. So if this is getting submitted, I'm looking at it without bank statements just yet. I know very well what to expect and what would be the examples. So you can pause this if you needed to, but here, some details based off that. This is what will happen. So based off this example, here's the offer. You've been approved for this much. This is how it may look to you. And see that there? And over here, if you're doing 200,000, you want 200,000, you're doing 210,000 consistent. It's likelier to get that 12 years. This looks like a good file. And over here, credit is good, but no revenue. This could be a startup. And just having the right expectations and what would be required. So let me come back now into this screen and we'll close up. Give me 1 second. I'm looking through my tabs to make sure I didn't miss anything. And there's a lot of stuff to go through. I didn't go through every option. And as you saw, we were going through and speeding through the options of what I was just showing you. And okay, so that'll be everything from me. I hope you got a lot of value from this video. I wanted to show you the quick funding option. So if we come back to this, just so you have it on your screen. Oh, I think I know what it did. So I got to go back to my docs here. Okay, so let me open up this tab. And I think I have it in this one. I have different like Gmail accounts or professional accounts at domain name. So I have some things in different locations because I've been moving things, but you see it right here. So again, we went through all of this already, and I wanted to show you the majority of it for the instant approval, same-day funding, especially if you can't wait or you can't qualify for the other options. And that information, there should be a banner in the description down below. You can check out more to get started. Perhaps there's a questionnaire form that you can submit. If not, it's okay. But go through there and start your application process. And for like the SBA bank term loans and bank lines of credit, maybe other forms of equipment financing, collateral, if that's not available on the platform, you think you could qualify for it, you can reach out to me or whoever brought you and whoever you were going through with me or so. But understand that this is a great solution to go through and the expectations of it and what I've mentioned and the standards for it. So you're not questioning like, what is it that I should qualify for? What is it that's best for me? So there's quite a bit. So I'm looking over here at some comments. Let me move this over. Hi, Jeffrey. Don't think you're in here anymore. I know you commented earlier, and I couldn't get to the comments because I was trying to finish through this. Sometimes I'll let you guys know that. But I apologize for not getting to you sooner. And it's just been something I wanted to finish through first and then come to the comments. If there were any, this is a spontaneous live. It's not like I broadcasted it out, by the way. So I just went through this quickly early on in the day and just want to make sure you have it. As a former realtor, I appreciate the commission setup you offer. Okay. Yeah, and I understand, and you understand too, that, like I said, that I don't earn until you earn. So I could have done it where there's a processing fee, a contracting fee, like this other stuff. I've done stuff like this in the past, depending on where I go, like directly, or if it's indirect, it's different. But it doesn't always make sense to do that. And I feel kind of icky doing that kind of stuff. And other people will because they earn more from a call. They earn more from the fees than actually you getting the funding. What if you don't get funding? Because they know that a lot of people can get disapproved, but they made $30 to $100, $30 to $200 just packaging your application, or 20 to 200, whatever it is. And so what? They made because they knew you didn't qualify just yet. But just be very cautious of that. It's not something that's always recommended, and there's things now where that's not what they want to see as well. Nice. And I'm not sure, you don't think you're in here anymore, but what is causing that to increase? Did you get new inventory? Same old inventory? You're cycling through it quicker, maybe 30 to 60 days, maybe even sooner than that. There's one product that's more in demand. You're adding a new product in store. Your sell-through rates are different. Your inventory management. There's a lot of questions to ask there to understand the ROI better, but that's good to hear. Yeah, continue to increase it. It can only go up from there if you see that pattern, or maybe it's just a seasonal thing, but maybe you found the right thing and how to list it correctly and how to have the right people targeting to purchase what you have. Yeah, how that was sent to you. And Zelly can pose a problem, guys. Like, I know that for both business and personal life, especially in your personal life, when you're owing somebody, somebody owes you, and how the money's coming into an account, what you're depositing into an account. Like, there's a lot of other stuff there. Not that PenFed is wrong, because it's good. Personal account, other half checks, e-checks, got it. I know how those work. Into your LLC. So it wasn't into your LLC before, it was into a personal account first, and then the other half of that going into your LLC. So what's counted as a deposit, because it goes into your personal account, if you deposited more into one account, but in this case, if it's half, you're losing a lot of revenue. So when you go and apply with one account, like even if it's a personal account, that's the one that you're going to apply with. That's the one that money will be deposited into. How much revenue? 50% cut. It's like a 50% loss being put in another account that won't be looked at and won't be counted as revenue if it is. Yeah, do it all in one account. I've showed a lot of people how I've made sure a lot of people go and get an account open through their business account, deposit at least 3 full months of deposits. Don't just start transferring all this stuff, because once I start seeing it, usually won't count like that. Yeah, your credit utilization is one of the most important factors for your credit. And it depended on what kind of inventory, but how much inventory did you end up spending at what phase of your business? There's quite a bit more when it comes to stores, e-commerce, Amazon stores, and any other kind in general, retail, or any kind of business. It's best that I understand like what went up, what went down, what stayed the same, variable, fixed. That way I give you a better representation of things. Yeah, just pay it down. And I'm not going to start giving you guys the credit tips on all this stuff right now. I know it very, very well. But make sure you pay it down, pay it back as fast as you can. Don't wait for a closing date. Don't let things roll over. Continuously letting something roll over also doesn't look good, especially when you have a large amount when you try to go get more funding. But that's good to know. So I think that's where I am going to end it. I appreciate you. Thank you all for joining me. Thank you for joining me a lot. I know. Rewind if you need to, replay it. All of this is here. And remember, I've been in your shoes, or you are far past this. You're looking for another option. And I get it's a struggle out there. And know that I care about you and your best interests at heart as a person, whether you are somebody who's trying to get it together or has it together. But I also want to make sure that we are being, one, cooperative. I was going to say 2 different words. Cooperative. And then 2, just respectful to one another and giving feedback. I respect feedback, patience, discipline, and just making sure you let me know, hey, Michael, not interested. Hey, yeah, I'll get this submitted in a little bit. Yeah, I'm in the process. Like, that's not hard to do, but so many people miss out because it's a character flaw. That's what it is. And having been a digital entrepreneur and a funding expert for many years, I see it more than most people do, more than maybe you see it yourself, or you need to change, but it takes work to do that. And I can help you along the way if you needed that. But that is everything from me. Of course, I couldn't cover everything. We'd be here for like 5 to 10 hours covering all my knowledge, and I have so much to give you on credit, cash flow, collateral. I know my stuff, liquidity, equity. I can give you all the details, even without looking at a document. Like, I know it. And I know if your credit is this, if it's this, if it's that, if it, like, I know exactly what you should do to fix this. Drop down the balance to this, utilization here. Here's how you get this card first. You go get this advance first, and then do this. This is the long-term strategy. There are many options out there that are available. But again, I wanted to cover the funding that's fast, and I know it's well suited to you and your needs. And that's a great viable solution. If the benefit, again, exceeds the repayment, can you stack a line of credit? If it doesn't make sense, sometimes things change. Prime rates out there, and then what you're seeing with factor rates, a lot of volatility in the market, it's not as stable. Well, banks aren't lending as much, so you're seeing a big influx of people, real estate investors here, real estate fix and flips, holds, and more. And then you're also seeing a lot of working capital for cash flow needs. Growth and expansion is one, but two things. But cash flow is really the premise right now for most people, and they're hurting with cash flow. So to get cash flow now, then you expand, or now then you grow and expand. Sometimes you're growing and expanding because you're fine, but it's become hard with the cost. Like, average order value is what I wanted to explain, and I'll finish here. So I keep look at my numbers. So average order value, meaning how much are you learning and earning off of one of your customers, whether it's one product or multiple services or one. What's the ascension of one person coming through? What's the value you put on one person? Is it $2, $1, $5? And what's the lifetime value of that one person? So it's lifetime gross profit value. So if I have an average order value of, let's say, $500 per person, that's the amount that I expect on average to earn from one person out of this bundle, out of this sample, out of this population group. You might not have a large enough sample, not enough appointments, a lot of other stuff. And though you reverse engineer from that and think $500, what could be possibly they be getting for $500? Is it a one product? Is it maybe 2, 3? There we go. So what you're doing is you're positioning a product. So let's say you have something where it's an account, it's a software where they're paying like $97 a month. And then now you ascend them into a different subscription package, or they need to get more additional contacts or for SMS or emails, whatever it is. So now they're on a $297 a month, and then they get more access to other stuff. That's another subscription. So $97 account, then they turn into a $297, or they stay at $297, one stays at $297, whoever it is. But maybe now you go $97, but if you need an additional done-for-you service, that'll be $297. And then after that, coaching, then we can do now. That's probably like 1,000, 3,000, 5,000, 10,000. But you could do like 97, 297. Maybe have an offer for 497, 997. Coaching more, whatever you do, depends on the model of the business. But that's how you're squeezing more dollars out of that one person that comes back and buys the same product and or service or services, products, etc. What I meant to say. Or they buy a different service. So now you're squeezing more lifetime gross profits out of that one person that you brought in, and you're building what's called a value ladder, a front-end product and service, and then the middle, and then the back end. As it goes up, the price ascends. Maybe you have a course. There's a lot of other stuff, and I can help you with this. But that's what I wanted to mention out of this video. Glad for having you here. Thank you for being here. And again, down below, there should be a button or a description for you to get more information to get started. So that is all for now. Take care. Bye.